we have an important announcement to make. I am very excited to launch SiGMA LATAM. That's right, a third summit in Latin America that will complement SiGMA in Europe and SiGMA in Asia.
Tenemos una fuerza laboral fuerte en Malta, en Kiev y en Manila. Es hora de que SiGMA aumente nuestra cartera y se expanda más allá de nuestra zona de confort, cubriendo todas las horas horarias con las nuevas oficinas en las Américas.
As cidades cotadas foram Buenos Aires e São Paulo. Acabamos escolhendo a segunda por duas razões.
Reason number one, there's always a great presence of media and events in offices in Buenos Aires, and we don't want to replicate more or of the same or compete with our friends.
Segunda, o grande potencial de mercado e a atual possibilidades de regulamentação dos jogos no Brasil nos darão mais motivos para decidir estabelecer nosso escritório lá.
Brazilian Federal Deputy Pompeo de Matos, for instance, believes casinos will be a vaccine for coronavirus, stating that taxing gaming money could jumpstart the country's economy in the wake of COVID-19.
Ele machuca a economia. E eu diria assim, para nós até ajudar a levantar a economia depois que passar a pandemia, uma das alternativas é, inclusive, legalizar os jogos. É uma alternativa perfeitamente possível, viável, eu diria assim, até necessária.
Assuntos como este, dentre outros, farão parte dos nossos debates em setembro.
Moving forward, we hope that our three pillar shows, SiGMA in Malta, SiGMA in Manila, and eventually SiGMA in Sao Paulo, will pave the way for iGaming communities to learn from, as well as do business with each other. I look forward to contribute to this and make iGaming truly a global phenomenon. I'm very excited. We have a very important announcement to make. SiGMA is heading to Africa. That's right, a fourth summit that will complement SiGMA Europe, SiGMA Asia, as well as SiGMA Latam.
We have a strong workforce in Malta, Kiev, São Paulo, and in Manila. So it's time for SiGMA to expand beyond our comfort zone.
SiGMA Afrique se déroulera en 2022, regroupant sous un même toit toute l'industrie émergente du iGaming et des nouvelles technologies.
We were then faced with the question where. We understood that gaming in Africa is dominated by 3 regions, East, West and South.
Nous avons décidé non pas d'organiser le salon à un seul et unique endroit, mais dans 3 majeurs pays et piliers du iGaming en Afrique.
En effet, SiGMA alternera chaque année, en commençant par la vibrante capitale Cape Town, en Afrique du Sud pour l'inauguration.
The following year, SiGMA Africa is flying west to Ghana and in 2024, east to Kenya.
We're looking forward to working with you in Africa. We're 2 years away from our inaugural summit in Africa, so time is on our side.
Si vous avez de l'expérience, les connaissances et le réseau, n'hésitez pas à nous contacter.
Here at SiGMA, we firmly believe that our 4 summits, SiGMA Europe, Latam, Asia, and now also Africa, will pave the way for the gaming community to learn from and do even much more business with each other.
Rejoignez SiGMA, le Festival mondial du iGaming.
AIBC America's virtual conference. We're ready to go in 5, 4, 3, 2, 1.
Hello and welcome to AIBC the Americas Digital Conference. For all of you that are joining us from all over the world, thank you.
Hola y bienvenidos a AIBC Américas Digital. Estamos muito felizes por vocês estarem aqui conosco.
Well, here is what to expect from today. Over the next 4 hours, we bring you content available on our Swapcard platform, which will be available in 3 different languages: English, Spanish and Portuguese.
Estaremos trazendo para vocês 4 horas de conteúdo, 3 idiomas: inglês, espanhol e português.
And the agenda that we'll be bringing you has some top-tier speakers for you today, from YouTubers from all over the world to also investors and representatives from the United Nations. And if you are joining us on Facebook and YouTube, we would advise you to head over to Swapcard instead, where you can book in specific meetings with some clients. You can also network on chat rooms and take part in interactive polls.
Junta-se no Swapcard. Muito obrigada e profite bastante.
Well, let's get the day started. First off, a big thank you to our platinum sponsor, Chili's. Now, many Latin American countries have expressed concerns over the effect of cryptocurrencies on financial stability and also their money laundering risks. Beyond issuing official warnings, however, financial authorities across the region are yet to reveal plans for any significant future cryptocurrency regulation. So we have, starting off today, regulation as our topic, and we have a poll available for you all to participate in.
Como a Jessica explicou, temos algumas pesquisas acontecendo no Swapcard e a primeira pergunta hoje é: qual tecnologia emergente terá maior impacto nos mercados da América Latina?
And as Hamza mentioned, the poll that we'll be asking all of you, our delegates and viewers, is which emerging technology will have the most impact on emerging markets across Latin America. So place your votes and we'll read out the results later on today. It's time for our first panel discussion of the day.
Forward thinking, cryptocurrency regulations in LATAM.
Hello everyone and welcome to our panel today. We're discussing cryptocurrency regulations in LATAM. Yes, today we will dive into the regulations in Latin America. And firstly, let's start with quick introductions and we can move forward with the discussions. First of all, I would like to introduce myself. My name is Elena Obuhova. I'm a business strategist, entrepreneur, and founder of FS FinTech Advisory Services. We're an international company with blockchain expertise and bridging the gap in the VC investment field by helping promising startups in getting access to VC investors, as well as helping SMBs to scale up their business. And today we have 2 more speakers, Jose Lanz, who is a journalist, lawyer, specialist in strategic planning, and also a professor whose work was covered in various crypto and blockchain publications. Jose, could you please tell a little bit more about yourself before we move to Etienne?
Well, thanks for the invitation. I'm actually a lawyer. I exercised my profession for a couple of years, over a decade, before starting to move towards the crypto space. And right now, I have been focused on writing about cryptocurrencies basically since a little bit before the 2017 boom. And like a lot of people say, I haven't ever looked back. So basically, I've been working with several media right now. I'm focusing with Decrypt Media, which is an editorial funded by Consensus, which is a major corporation focused on decentralization of finance. And a lot of
Thank you.
blockchain.
Thank you, Jose. And we also have today Etienne Luque. Etienne is the CEO of Legal Lab, a startup that applies emerging tech to solve legal problems. Etienne, could you please tell us more about your current projects and a little bit more about your background?
Yeah, sure. First and foremost, thanks for the invitation. I'm very glad to be here. Well, I'm a lawyer. I went to Harvard Law School. Afterwards, I worked for the government. I clerked for a Supreme Court justice in Mexico. I worked for the Department of Justice in Mexico. And around 2017, just like Jose, I decided to focus on technology. I started with artificial intelligence. Afterwards, I moved to the crypto space also because the crypto offers so many solutions regarding legal and juridical problems. And I decided to just create a really small startup that actually tries to just develop apps and technology for lawyers. And also, I have a legal practice regarding fintech and technology. And let's say this has been moving quick. Because it's something that just boomed around 4 or 3 years ago. There's been a lot of advancement in Latam, and I hope we can talk about it.
Thank you, Etienne, for his introduction. So let's start with our discussion. As we all know, Latin America is one of the fastest growing regions in terms of the crypto adoption. And what is the status of cryptocurrencies in the Latin American region? Maybe Etienne, you can start giving a little bit more insights in this topic, and Jose can also share his point of view and experience.
Sure. Well, let's say that crypto is really a magical solution for the monetary and economic problems that are current currency in some Latin American countries, Argentina, Venezuela. These are the crypto has been really a solution for just making people safe in their property and their money, because like you know, a lot of restrictions are in place in some of these countries. At the same time, Latin America has been a great laboratory because you know there are some special circumstances that actually help these special this space to grow. And at the same time, we've seen a phenomenon that is very interesting with countries like Mexico or Brazil or even Colombia that actually have tried to regulate the space. And I think we can talk about it a little bit later, but Mexico is one of the first countries in the world to actually have a fintech law that actually regulates payment systems, cryptocurrencies, and crowdfunding. So this has been a very interesting experience because we also created a sandbox where people can actually create new models that don't fit the legal definitions of crowdfunding or payment systems, and they can be regulated by the authorities. At the same time, there's still a lot of pushback from financial entities, and especially pushback in the crypto space, because after the 2017 boom and all the ICOs, there were a lot of scams. So people, and especially the authorities, are very scared that people are getting just well. They're getting scammed and not getting or people are taking other people's money away. So it's a very like I said, it's very interesting because we have things going so I don't know if Jose wants to accompany in this.
Yeah, sure.
And Jose,
well,
what is
sorry,
your...
to allow.
huh?
Yeah, sorry, Jose. Yeah, what is your opinion on the current situation in Latin American countries?
Yeah, well, basically, Latin America, we're gonna know that it's like a very heterogeneous place, and every country has its own way to regulate things, and it's not like a uniform criteria. And when it comes to many things, cryptocurrencies, technology, and everything. So we have basically three groups of countries. In my opinion, that's how I see it. It's basically we can group those countries into three criteria. The first one is where cryptocurrency is legal, and the other one is where cryptocurrency is illegal, and the third one is where cryptos are illegal or basically unregulated. That's important to know. And legal is when you have a norm or a legal framework that says you can do this because there's a law that protects you. Illegal is basically the contrary. There's a law that explicitly says you cannot do that, and illegal or unregulated is when you have no law that doesn't you have no law that regulates something. So basically it's not technically forbidden, but you don't know what the authorities are going to do. We have a premise that is named nullum crimen nulla pena sine lege, which basically says if there is no law that explicitly says something is it's illegal, you can basically do it. What is not explicitly forbidden is passively or tacitly allowed. Basically, the countries that deem cryptocurrency as illegal have been lowering the number, and right now only Bolivia forbids the use of cryptocurrencies in general, except those that are not, because those are not assets or currencies that are backed by a government. They say that only we allow to use any kind of money that is covered by a bank. And this is very interesting because we have another extreme, like such as Venezuela, where they have tried to create a whole legal framework around cryptocurrencies, and basically the state has created a token, and that would fall into the category of a state-backed token, which is the Petro. And we can say whatever we want about it, but the whole once their politicians committed to create a cryptocurrency, and they have tried to regulate everything along the way. How do we tax? How do we allow international transactions? Is it money? Is it not money? Etc. And Colombia is also trying really hard to regulate the space, but actually there the whole crypto space is in a legal situation because the efforts have not come to an end. They have tried with a law, the law 028 in 2018, which was they let it go, and now Congressman Mauro Toro, among others, are trying to push for a law to try to regulate the space, but it's very hard because they form a shield on their financial system because of all the illegal activity that was happening there in the 90s. And Brazil and Argentina are also trying to regulate the space, but they are mostly focusing on cryptocurrencies not in the tokens per se, but around the transaction. They want to regulate the way people transact with cryptocurrencies and not really the whole space. So basically, Latin America is a very interesting place to be and an interesting region to follow because not every country thinks alike. And it's like a nice way to see how people um, try different approaches and different solutions to the same issue, to the same problem, and let's see how they work.
Yeah, it sounds like a lot of things going on. And Etienne, my next question to you. As you mentioned, the fintech laws, it was implemented in 2018. And as I remember, it put additional limits on the crypto transactions. It's very interesting to know how did it actually affect local crypto businesses?
This is a very interesting question. Like you said, since 2018, there has been a regulation on cryptocurrencies. The law actually defines a cryptocurrency as a virtual active, an asset, sorry, a virtual asset. And this is very interesting because it's one of the few countries that actually has a definition for cryptocurrencies. Like you know, in the States, there's still a struggle to determine whether crypto is code or is an asset or is money. Whereas in Mexico, they define it, and this was at some level a very good option because you know what to expect when you transact with one of these currencies. At the same time, afterwards, the central bank decided in 2019 that cryptocurrencies could only be used by banks. Between them and internal transactions, and therefore forbid any type of exchanges to buy cryptos. This was fought by some of the local exchanges, as you know, Bitso or Volabit. They all came up with some way of just making an regulation arbitrage and get off the hook. And actually, you can still buy cryptos in Mexico via Bitso, via Volabit. But the idea behind this is that the central banks thinks that cryptos are scams. Therefore, the public should be protected, and the only use you can have for cryptos is for big financial transactions between financial entities, banks, insurance companies, or other type of auxiliary financial institutions. Therefore, we are living, like Jose said, in this kind of a gray area, gray space, where even though it's regulated, it's not regulated, and since the definitions that were given are so specific, there is a lot of room for lawyers to just get around the rules and do other things. At the same time, as you know, there is a problem with jurisdictions because a lot of these apps, for example, and you know many of them, Coinbase, CoinEx, or BitMEX, they're outside of Mexico. Therefore, you can just download the app. As long as you follow KYC, you can buy all the crypto assets you want. So I don't think it has been a good policy, even though it was a well-intended policy, because the idea behind this is no more scams. But at the same time, this is, in my opinion, not the best way to do it. So Mexico is living a very bizarre situation regarding this. And at the same time, I think there are many lawyers that are challenging these rules. And one of the main arguments that is given is that Bitcoin and other cryptocurrencies are code and therefore cannot be treated as an asset or a money or even a virtual asset. Therefore, for all purposes, tax purposes, commercial purposes, etc. So I hope we'll see one of these cases arrive to the Supreme Court pretty soon, and then we'll have some light on what follows.
Thank you, Tian. We're actually running out of time. So I think we have maybe a few seconds just to cover final remarks. So as we already discussed, the crypto regulations in LATAM are still evolving, and it still takes time to have some settled framework for crypto and blockchain projects. And maybe you can just say in one sentence, what do you expect in future? Do you expect the government to tighten regulations or to ease crypto regulations? Jose, you can start just in maybe like one sentence. What do you expect?
No, I think there is confusion in the whole ecosystem, and especially in the way that politicians think about cryptocurrencies. So I don't see a very specific solution on the short term, and I see that basically in terms of regulatory issues, we're going to be pretty much the same as we are right now. It's
Okay,
hard.
and
It's very
Etienne,
hard to regulate.
what do you think about the situation in future?
The code is law, therefore the code will survive and doesn't care about any regulation.
Perfect. Thank you a lot for your inputs today and this great discussion. I hope it was very useful and interesting for all people who are watching us right now. And thank you again for participating.
Well, a huge thank you there to Elena for her insights and for her moderation and for our two guest speakers. Now, next we're taking a look at one of the most significant weak spots that we saw during 2020, and that was exposed during the COVID-19 pandemic. That was supply chains and the sphere. As the virus continued to spread, communication and breakdowns, also a lack of workforce really enforced the need for hyper-automation in the global supply chain. So let's take a look at our next panel discussion.
Supply chains in the spotlight. 2 success stories.
Well, 2020 has certainly been an interesting year, but it's been a year that we have seen accelerated adoption when it comes to the emerging tech space, specifically in the supply chain models. And we have 2 fantastic examples joining me today. We have David joining us from Panama, and we also have Carl, who's normally represents Mexico for Morpheus Labs. It's very interesting use cases from both of these 2 gentlemen. So first of all, thank you so much for joining me on the line today.
Thank you, Jessica. Glad to be with you.
Thanks, Jessica.
Absolute pleasure to have you both. And I think for our viewers, it would be great just to get a short introduction to the organizations that you're both representing today. So maybe, David, you'd be so kind as to start with yourself and the company you're representing.
Thank you, Jessica. I am the CEO of Food Chain, which is a blockchain development for the food and agricultural business in Latin America. And what we do is not only do we use the blockchain for traceability and supply chain management, but we also have developed several services, a trading platform where we unite farmers directly with buyers in the United States and Europe, as well as provide other services. And we're currently developing what we call Food Chain Pay, which is an electronic payment system that will be tied into the whole structure of the food chain.
Fantastic. And actually, when I was looking into your organization, David, it seemed that from an agricultural perspective, it seemed to be one of the most technically advanced. And Carl, I'd really like to turn to you now and you to share with our viewers some of the work that Morpheus Network has been doing.
For sure, Jessica. So first, the company's called Morpheus Network. So it's Morpheus.network. And we're a supply chain middleware company. So just as hardware and software doesn't require any kind of explanation, we really sit between like a shipper or a seller and a buyer of like global products and automate then all those transactions between that seller and the buyer. Now, what we found is that a lot of the supply chain participants, they'll all have their own platforms, their own databases, their own communications protocols, and we're trying then to put all that information on one platform, make it shareable, make it trustable, so that people can actually streamline their supply chain operation.
Fantastic. And I think one of the first questions and one of the first and biggest misconceptions is when it comes to small and medium enterprises on the blockchain and when it comes to supply chains is profitability and if it makes sense. And David, from an agricultural perspective, I'd love to turn to you and just ask you how you would answer the question of how to ensure profitability when recording on the supply chains.
Well, we have a very defined strategy, and from when we initiated, we defined that we want to have a lot of different alliances and partnerships. So what we did is we went and started doing partnerships with multilateral organizations and dedicated to the food and agricultural business in Latin America. So we have right now 4 different alliances with the Inter-American Development Bank, the Institute of Agricultural Cooperation, Latin American Development Bank, and others. And what we've done is that they work directly with farmers and governments throughout the entire Latin America and the Caribbean. So our strategy was to work with them and start developing pilot programs with local governments. And the reason is that we wanted, Latin America has a pent-up demand for this type of supply chain and trading and the blockchain as a whole. And but we wanted to go ahead and come in from the top and then work on down to the producer organization. So we have a lot of different pilot programs going on right now in partnerships. And these partnerships, what they do is they pay us initially for these pilot programs, and then we go out and implement it into the larger agricultural sector. We are based on a subscription base, and we make it as easy to get on as possible. Very small farmers, family farms, less than 2 hectares, we provide the service for free. We don't charge them, and it's our way to give back to the farming community. So everybody has the ability, whether they can pay for it or not, to be able to come into the digital age.
And Carl, if any of our audience do head over to Morpheus.network, they can clearly see there's quite a lot of big name collaborations that Morpheus Network has actually undertaken and corporations around the world that it's worked with. So can you maybe talk us through some of these collaborations and some of the feedback that you've had from them when it comes to their experience with this?
Sorry, Jessica, I lost you from that question. Just repeat it quickly.
Of course. When it comes to your organization, if you go onto the website, you do see on Morpheus.network that there is a lot of big collaborations that your company has integrated with. What have been their experience with blockchain?
Yeah, so we're a SaaS solution. So it's our solution's hosted in the cloud. We run it in like the major clouds like AWS, Amazon Web Services, Microsoft Azure. And what we use blockchain then is a notary service for posting data between counterparties. And that means it's really easy to share data between different parties to facilitate, global trade. We have Fortune 100 companies using the platform, and we also have some smaller, medium-type businesses. So, really, anyone with a digitization challenge that's, become, with COVID, maybe one of the #1 priorities in organizations, how we move products around the world and do that on a digital basis. Morpheus is a great solution for that.
Fantastic. And David, I'd love to turn back to you there, because you did reference that across Latin America, you do work with some different governments as well when it comes to really onboarding this technology. So what kind of feedback have you had so far?
Feedback has been excellent. Right now, everybody wants to, in one way or the other, implement blockchain from the government level as well as the business level. What we're finding out in Latin America is that they don't really understand how the system can really be integrated to a lot of their system. Like Carl just mentioned, is that integration aspect. And so we have basically have open APIs and ways that we can connect with government systems. And one of the alliances that we have is with LACChain. And LACChain is a blockchain for Latin America from the Inter-American Development Bank. And what they've done and are doing is connecting all different types of government services like customs, for example. So all that document can be digitized and moved through the system. So we're part of that network, and that's what's allowing us to be able to promote and onboard a lot of these different government agencies that are very interested, as well as private business, that are very interested in coming on board to the blockchain technology.
And it's very clear from speaking to you both that you both have very different but very hands-on approaches when it does come to this integration. So I'd like to ask you both, and David, I'll start with you. What are some of the challenges that you think may be in the way of this adoption of this technology moving forward?
I think what we're seeing, like, there's a lot of demand, especially from governments, and since we're in the agricultural business specifically, a lot of from the Ministry of Agriculture. I think the challenges that we have is been trying to explain to them how to apply the technology along the supply chain, from the field all the way up to the buyers. And for that reason, right now we're in developing an online virtual university for blockchain, and particularly for the food chain, with two of the multilateral organizations that we have associations with. And that is basically to be able to have people train and understand the technology, and makes it easier as a way forward for them to then to start applying it to their own systems.
Fantastic. And Carl, I'd love to turn to you and ask if there was anything that you wanted to add there, any challenges that you see in the way of this moving forward.
David mentioned a really good point. Latin America, hasn't invested in some of the previous technologies, maybe the client server or the web versions. So what we're doing now is using blockchain to leapfrog into these new emerging technologies, state of the art. And that's why we're getting a lot of interest, not just in, mature countries like the United States, Canada, but we've got projects in Argentina, we've got projects in Mexico and Brazil, but also in lots of the African countries. So, we really see as blockchain and some of the other emerging technologies like IoT and machine learning as a way of leapfrogging and updating the technology stack from a government perspective and also from a private company perspective, and allowing them people to transact with other companies around the world, on a very clear, transparent and trusted basis.
And it's very interesting speaking to you both, because you both are representing different regions and multiple regions across Latin America. So for example, I'm currently based here in Malta. From a regulatory standpoint, a lot of European counterparts will look to Malta because it's a small island and quite a small regulatory framework and sandbox when it comes to leading by example. Is there a region across Latin America that either of you are able to identify as being one that maybe is more advanced than others, or maybe holds more potential, maybe because of a more at ease regulation?
In the case for the agricultural business, I would say that Argentina and Peru are advancing. They have specific government mandates that they need to start going, digitizing the whole agricultural process. And we're seeing it every day, more people and more companies and countries adopting the same thing. Paraguay, for example, right now is adopting that they want to have all their trading done through a blockchain. And so we're working with them on that. And the same thing as Panama and other countries. But I would say that some countries are more advanced than others in their strategy to implement blockchain and the technology of the fourth industrial revolution. But I would say as a whole, I think every country in Latin America is moving in that direction. And especially with COVID, it has accelerated that position. So I would say throughout the whole Latin America, at least in the agricultural business, definitely there's a lot of interest in countries are moving forward with that implementation.
And Carl, you were nodding along a little bit there. Was there anything that you wanted to add?
I could talk a little. Yeah, I could talk a little bit about also the customs perspective in LATAM. So Chile is probably, the country, in exception, in terms of exports in LATAM. It's a small country, but they have, been very successful exporting timber, salmon, wine out of Chile. So their customs has been really strong for a while. And then Mexico, we have this, the USMCA trade agreement. We've been having digital invoices for 15 years in Mexico. The Canada and the US is playing catch up in that respect. So, we do see these areas, like Chile, like Argentina, like Mexico, where, we're maybe a bit ahead of the curve in some of these digital technologies. So I think it's now, if we can connect them together, then obviously, we can create more trade, not just throughout the Americas, but throughout the world.
It really is such a fascinating... Absolutely. Well, gentlemen, that's all that we have time for now. But David, Carl, thank you so much for your insights. It was an absolute pleasure to hear you. So thank you so much for your time today.
Thanks, Jessica, for inviting us. And look forward to keep the conversation going on your program.
Thank you. Well, I hope you enjoyed those insights as much as I did. Really interesting perspectives there from David, who's working very closely with local regulators on really implementing supply chain agriculture across the networks, across the different Americas, including Panama and Argentina. And then we saw from Carl, who's integrating via Morpheus networks, using systems such as DHL and FedEx, using supply chain systems on the blockchain. Really interesting discussions there, and that gives us to the end of our regulation and discussion sessions.
We have an important announcement to make. I am very excited to launch SiGMA LATAM. That's right, a third summit in Latin America that will complement SiGMA in Europe and SiGMA in Asia.
Tenemos una fuerza laboral fuerte en Malta, en Kiev y en Manila. Es hora de que SiGMA aumente nuestra cartera y se expanda más allá de nuestra zona de confort, cubriendo todas las horas horarias com as novas oficinas em las Américas.
As cidades cotadas foram Buenos Aires e São Paulo. Acabamos escolhendo a segunda por duas razões.
Reason number one, there's always a great presence of media and events in offices in Buenos Aires, and we don't want to replicate more or of the same or compete with our friends.
Segunda, o grande potencial de mercado e a atual possibilidades de regulamentação de jogos no Brasil nos darão mais motivos para decidir estabelecer nosso escritório lá.
Brazilian Federal Deputy Pompeo de Matos, for instance, believes casinos will be a vaccine for coronavirus, stating that taxing gaming money could jumpstart the country's economy in the wake of COVID-19.
Ele machuca a economia. E eu diria assim, para nós até ajudar a levantar a economia depois que passar a pandemia, uma das alternativas é, inclusive, legalizar os jogos. É uma alternativa perfeitamente possível, viável, eu diria assim, até necessária.
Assuntos como este, dentre outros, farão parte dos nossos debates em setembro.
Moving forward, we hope that our three pillar shows, SiGMA in Malta, SiGMA in Manila, and eventually SiGMA in Sao Paulo, will pave the way for iGaming communities to learn from, as well as do business with each other. I look forward to contribute to this and make iGaming truly a global phenomenon.
Well, now it's time for a new set of discussions, and thank you now to our sponsors OVR for sponsoring the next set of sessions, focusing on DAOs and fintech processes. Well, globally, fintech processes are growing. Last week even, we saw JP Morgan adopting a fintech platform to digitalize processes for clients that open custody accounts. But where is the industry heading? Let's take a look with our next set of panelists.
Accelerating growth, blockchain integration, DAOs, and fintech processes.
Hello everyone, welcome to our panel on the AIBC America Summit. And in this panel, we'll be discussing the growth and adoption of blockchain technology, its integration, and also the progress we've seen in relation to DAOs and fintech in general. I'm joined today by some excellent panelists, and I'll start off by introducing myself. I'm Jonathan Galia, I'll be your moderator for today's panel. I am the CEO of BCA Solutions, which is a regulatory and technical advisory firm with offices in Malta, Liechtenstein, and Singapore. Simply put, we offer licensing and regulatory services in those three jurisdictions to exchanges, brokers, and service providers, and we also offer regulatory and strategic advice to public authorities and governments. And now I'll let our panelists introduce themselves, and we'll kick off today's discussion. Gabriel, if you could do us the honors, and we'll proceed with you first.
Yeah, thank you, Jonathan, for the invite. So I'm Gabriel Franco. I'm founder of Mobile Life, which is an investment banking. We raise capital for tech, including blockchain, and more recently also renewable energy, cannabis. And also from my side, I've been advising and investing in some of the companies we get to help. Currently based in Colombia, and yeah, excited to be here.
Thank you. David?
My name is David Orban. I am the founder and managing partner of Network Society Ventures, part of the Network Society Group. We are longtime believers in the power of decentralization that compounded with the exponential technologies that we see around allows disruptive business models to be experimented with and great investment opportunities as well. We see blockchain as just one of many industrial sectors going in the same direction through this.
Thank you, David. Rosina?
Hi, everyone. It's a pleasure to be here with all of you. I'm the founder and CEO of the Blockchain Academy, which is an educational project and advisory company also focused on crypto, blockchain. Generally, we launched our services in Brazil in 2016. And we also have experience as being advisors to authorities, and as just like you, Jonathan, here, and somehow working on creating and promoting the local ecosystem as well. Happy to have you all here and looking forward to our discussion.
Fantastic. Thank you, everyone. And in fact, again, we'll be discussing the growth and adoption in terms of blockchain technology and its various different facets as well. And speaking of blockchain technology, again, blockchain technology, as let's say, as opposed to common thinking, was not born thanks to Bitcoin, but the concept of blockchain, of course, was before that. And I would say that, however, blockchain technology in its practical sense has really and truly been with us thanks to Bitcoin, which again had its genesis block mined in January of 2009. So it's been more than 11 years since we saw, let's say, the advent of Bitcoin. And I would say that 11 years have passed, but still, really and truly, we mostly talk about cryptocurrencies when we, let's say, talk about users of blockchain technology. And are we still in an age where crypto seems to be the main use case of blockchain technology? Or are we seeing some other emerging users which do merit their own attention as well? Perhaps let's start off with you, Rosina, with this first question.
Sure. Well, it is my understanding that we are still in this moment where cryptos are still the main topic for discussion. So starting from Bitcoin, it's the first type of money which is global, supranational. It's working, it's liquid. So I believe it's the first relevant use case of all involved in all this discussion. We could also mention the stable coins. And I think all of that together is deeply changing and disrupting the financial market. But also in parallel, we're starting to see some evolution in what we call blockchain for other purposes. I believe that people are understanding the potential, starting to innovate. And then I believe that in the short, medium term, we could have some disruptions as well, as long as regulatory discussions evolve together. That's my understanding.
Great, thank you. David?
We are right to be impatient because there are a lot of challenges in the world that technology needs to address and help us solving. But imagine that we are in the maybe mid-70s, and the four of us, as well as the people listening, are aware that the ARPANET exists. And we are equally impatient because it still hasn't changed the world. But there will be still another 20 years to go before the successor of the ARPANET, the internet, as we know it today, is just starting to become something that more than the specialists are familiar with. And it will be another 20 years after that when everybody understands that the end of the internet is indeed changing the world. So will it take 50 years before blockchain has changed the world? I hope not, but only if we are persistent and if we keep our eyes on the long-term mission, we will be able to deliver on the promise of the original dreams of those who created and architected blockchain. And the intermediate applications are all good and fine, but we have to aim for radical disruption.
Very valid points. Thanks, David. What about you, Gabriel? What's your take on this?
Yeah, that's a very good question, Jonathan. And I would say definitely Bitcoin obviously brought, a stage of innovation back then, like, the 0 to 1 that Peter Thiel talks in his book about the innovation. You always have to innovate, scaling, right? One level. So I believe Bitcoin brought us to all this fascinating world. But still, as you say, I would say purely cryptocurrencies right now that are kind of like dominating the space. But first, with Bitcoin, it's like the commodity, the gold 2.0, as they say. But then you see how Ethereum also emerged as a platform to create smart contract companies and dApps, right? But it's still too early. And now we've seen this recent DeFi revolution, which is basically bringing financial products, traditional financial products, to decentralized. So, I mean, for sure, I think it's going to continue, and the system is changing to more decentralized networks in a way, although still very centralized. Still, Bitcoin is quite centralized, stable coins, but you will see examples that will bring more decentralization. So yeah, I believe it's still cryptocurrencies the main theme, the more important right now, but for sure will change down the line. But it's long-term play.
Yeah, but you mentioned again various projects like Bitcoin, Ethereum, even some recent DeFi projects, most of them being built on Ethereum as well. And I would say that again, that shows that there's been a bit of a, let's say, change in terms of how we see blockchain network, permissionless blockchain networks, whereby again, we saw Bitcoin's main use being that of, let's say, hosting a currency, which is intended to be used as a means of payment or store of value, depending on your point of view. We've seen Ethereum, which again advocates the use of smart contracts, and then we saw the whole DeFi movement kicking off. But the commonality, let's say the common point between all these different networks is that they have a tokenized model which serves as an incentive. And now we started seeing, let's say, the emergence of blockchain networks which do away with this tokenized model because they don't need an incentive as they are permissioned networks. I'm talking about enterprise blockchains here, and we're seeing an interest in these, let's say, so-called enterprise blockchain platforms. What's your take on this? And as in, is it something which you see potential in? Do you think it's a gimmick? Do you think it's just a passing trend? What's your take on this? We'll start off with, yeah, go ahead.
Sure. Well, I understand lots of people underestimate this type of project because, of course, if we compare the immediate deliverables, they are very much far from what we are seeing in the financial market by now. But I'm confident that in the medium term, when, as David was mentioning in the beginning, when blockchain encounters other technologies and new disruptive models are created based always on legal endorsement, I believe we start to feel more disruption in the way we change not only information, but generally based on the idea that tokens represent things, they represent rights, and any other thing that we can imagine.
Thank you. Very valid inputs. Gabriel, would you like to add to that?
Yeah, sure. To be honest, with these enterprise blockchain, I mean, when all this movement started, I got excited about the decentralized component, right? You don't have to depend on a third party or government or central company, right? So when appears the blockchain, the enterprise blockchain, to be honest, I'm not a huge fan, or I not that I got disappointed, but it was not the thing I was waiting for. I'm waiting more for more decentralized plays, right? Or let's say Ethereum 2.0, what will happen with them, right? So, I mean, not that it won't work the solution, but I think it's not the main objective of the blockchain, right?
Okay, so we have a differing opinion over here. What about you, David? Are you on one side or the other?
The competitive advantage of corporations derives still a lot from traditional analysis like Porter's view of a very linear organization. But today we have already seen, even without blockchain, that platforms such as Facebook and Google and others are able to capture an enormous value in different, more network-like systems. So as long as a blockchain-based enterprise is able to prove that it is superior and probably most importantly more resilient in the dynamic adjustments that it needs to implement as its environment evolves, then absolutely those experiments should be carried out. But it should not be done in order to replicate in a more expensive infrastructure the existing solutions which work absolutely fine without blockchain too.
Yes, and in fact, on that point, I would say that, again, there have been some implementations making use of, again, notable permissioned blockchain systems like Hyperledger, whereby let's say the use case itself was not quite strong, and in fact it only leads to certain inefficiencies when compared to other systems which have been with us for longer and might serve the purpose better. So I would say that in terms of, let's say, analyzing and let's say considering the use of enterprise blockchains, one should always keep in mind certain common factors which are applicable across the board, whether it's the use of permissioned or permissionless blockchains, by asking certain questions like, for example, are we talking about having a blockchain-based system being implemented in an environment where there is a lack of trust? And if there is this lack of trust, would, let's say, a potentially automated system be the solution for this as well? Because ultimately, if you were to use an enterprise blockchain solution just for the sake of, for example, recording certain data inputs, then maybe the answer is not making use of blockchain technology at all, but potentially might be making use of certain legacy systems which can work better. I don't know whether I'm sharing your sentiment on this, David, Rosina, or whether you have a diverging take on this.
Yeah, what I can say just to add quickly is that, for example, Facebook, the Libra coin, maybe they are not crypto in the sense of they're open, decentralized, but the positive thing is that they could bring a lot of usage. I mean, a lot of users will pay attention to this movement in a way, although it's not purely decentralized or crypto related. But at the end, that's the thing that is lacking in the crypto market, a real usage. So maybe a positive side on that, on the corporations, is that they will bring more attention and attention to the space. No?
Please.
What I was gonna say is I'm in line with David in his view that if we try to use blockchain for the existing models, it probably makes no sense. But if we are aiming at new types of models, then blockchain could be very much interesting. And all the environment is not ready yet. So we have a lot of marketing today, but we could have a lot of value in the short term. That's my point, and I believe David is in line with me when he speaks.
In fact, speaking about apprehension on part of the regulators, and again, a project which Gabriel mentioned as well, the Libra project. And it's a project which I would say goes at odds in terms of, let's say, what we typically expect of cryptocurrencies, and in that it is a centralized project led, of course, by one of the largest corporations in the world. However, we have seen, of course, let's say, the introduction of certain decentralized movements and ideas, one of them being the concept of a decentralized autonomous organization, the DAO. Speaking of the DAO, we know that the first DAO to come to existence didn't have, let's say, such a happy ending, in the sense that we know what happened in the DAO incident back in 2014 and 2015, whereby basically there was, of course, the DAO incident, which led to a hard fork in the Ethereum network. And from that year onwards, from the DAO incident onwards, have we seen any, let's say, change in the way that we perceive DAOs? Do you think there's any future in DAOs? And this will be our last question for the panel. So we'll just go for, let's say, a brief, let's say, opinion in terms of what do you think about the current situation of DAOs in general. Let's start off with David this time round.
You can see the wars card. I invested in the DAO, and I proudly displayed these scars because, as any investor knows, those experiments are essential. We cannot pretend finding scalable solutions unless we make mistakes too.
True.
The double entry bookkeeping system has been invented 500 years ago when we needed pencil and paper in order to balance our books. A new organization is very natural for a new kind of technology, and those that are able to implement governance systems aided by mathematics, the correct balance, the needs of a multitude of stakeholders are going to thrive for the next 500 years, driving possibilities that we can barely glimpse today, whether they are going to be autonomous car swarms in the form of completely different shapes than we see today in IoT networks, or it is going to be robots extracting precious metals from the asteroid belt. We don't have to restrict ourselves to existing examples of why a new organization under a new governance system should be extremely advantageous.
We just have time for two very last brief comments. Rosina, Gabriel, let's
well, I totally agree with David. So, and also I have some more scars too from the DAO. I had invested on Ethereum by then, and then I lost part of my money. So, and I agree that we are not envisaging yet what could come from that, but it's very promising in my perspective, considering that we are more and more digital, and then that tokens and this type of infrastructures could represent more things and rights generally.
That is true. Gabriel, your concluding comment?
Yeah, just to add to the comments, I've been paying attention recently to MakerDAO and the DAI, which is a stable coin that is backed by a pledge by crypto, right, on Ether. And I mean, for me, that's very fascinating. It could be very interesting, but it's still high risk because if there is a software bug, then you could lose all your money again and repeat the same scenario. But definitely will be some type of movement like that would be very interesting, especially on the stablecoin side.
Definitely.
So, yeah,
mentioning stablecoins, I think if we managed to pin down the concept of algorithmic stablecoins and pair them with a functioning DAO, I think we'll actually start seeing something very interesting happening in this space. Dear panelists, it's been a pleasure hosting and moderating this panel. Thank you a lot for your insights, and I look forward to connecting with you right after the panel. Dear audience, thanks a lot for listening in. Hope you found this panel insightful, and we'll see you with the next panel. Thank you very much. Thank you all.
Thank you.
Have a good day.
Thank you, guys.
Bye-bye.
Well, a huge thank you to Jonathan there for his moderation, and to our three speakers for sharing their valuable insights on the discussion of fintech processes. Now, our next panel discussion brings you two of the most renowned smart city speakers in the world discussing smart cities, a fireside chat moderated by Rachel McIntosh from FinTech Finance Magnets. Let's take a look at what they have to say.
The Smart City Challenge, a UN and World Smart City Organization perspective.
Hello, everyone. Thank you for joining us on our discussion today. I'm Rachel McIntosh. I'm a journalist and podcast host at Finance Magnates, and I am so pleased to be joined today by two of the world's leading experts on smart cities and smart city technology. So I'll reintroduce them now, and then I'll give them a little bit more about themselves. So first, we have with us Renate Castro, who is a smart city expert and the author of the book City Smart Up. and Marcelo Garcia, who is the Smart Cities expert with the UN Economic Commission for Europe and with the IESE's PPP Cities Initiative. Marcelo is also the founder at wisdomaccelerator.org and a TEDx speaker. So I'll ask you both to talk a little bit more about yourselves and the work that you do, starting with Renato.
Hello, everyone. Great pleasure to be here. Thank you, Rachel. Marcelo, pleasure to be with you on the stage again. Now, just for curiosity, I met Marcelo first time on a stage in France for MIT event, and we were three guys from Rio de Janeiro in a French event. So it was really interesting situation when we met last time. I'm living in Italy now. I've been working for the last 18 years with technologies applied to urban development. And I had a quite, let's say, intense experience the last 8 months with the pandemic. I've been working as a volunteer for the Italian government on task forces to try to mitigate the problem here. And it was a very, very nice experience in terms of understanding that smartness is not everything that we need. We also need a lot of resilience. And I think we're going to talk a lot about this during our talk. Thank you.
Thank you, Renato. And Marcelo, can you talk a little bit about yourself?
As Renato mentioned, I'm also from Rio. I spent more than half of my life living in Europe. I've been in Switzerland for the last 15. And my background is in telecommunications. So I started deploying very large-scale digital television platforms. Then that shifted into a very large-scale Wi-Fi platforms. And that's basically how I ended up getting involved with the United Nations, trying to bring affordable Wi-Fi to the poorest countries in the world via a nonprofit that is based in Geneva called Broadlight. That nonprofit evolved into, strangely enough, another nonprofit that is about a conference series in the blockchain and crypto space that was quite popular in 2017 to 2018 during the boom period. And we got mentions in The Economist, Financial Times, two-page article in the Handelszeitung, which is a big finance newspaper here in Switzerland. And that conference series, which is called Crypto Explorers, eventually evolved into a version for teenagers, if you believe it, which is Wisdom Accelerator. So I used the format that we had with up to 40 crypto professionals from around the world that fly to Switzerland to spend 3-4 days having discussions about what's next and having meetings with companies that are locally based. And that became basically a week-long conference for teenagers from around the world who would meet in Davos during the World Economic Forum and have conversations with people present there for that event. Now, that has been clearly, very much impacted by COVID, but that's, I guess, a topic for further down the line in our conversation.
Yeah, absolutely. We're going to have to talk about that Wisdom Accelerator later. That's cool. So, let's speaking of COVID, so obviously this has had a huge impact on just about every corner of our lives. I want to ask you a little bit specifically, both of you, about how the pandemic has influenced the work that you're doing. So, Renato, I know that you worked for 6 months in 2 coronavirus task forces, in Italy. Can you talk a little bit about that experience and how this has influenced your work?
Yeah, well, actually, I am 5 kilometers far from ground zero, where we had the first red zone here in Italy. It was the first in Europe. So it was, the city that is just our neighbors. I live in a very small city in Italy, around 5,000 inhabitants, in the countryside of Padova, northeast Italy. And that was my last trip. I was in Dubai. I used to travel a lot, but by chance, this was a family trip. We left exactly on the 22nd of February when we had the first case here and the first death. And we spent just 1 week in Dubai, and it was really, really complicated because every day we were following the news and the airports were closing and everybody was starting to avoid the Italians and avoid to come to Italy. Qatar Airlines had closed with flights to Italy, and we were in the flying Emirates. So we were quite desperate. We got to return home. and the 27th of February, and after that, everything, evoluted very, very fast. And my first reaction, it was much more as a parent, harder than as a smart city expert. I called the school. We realized that school was not coming back, and we were just coming out from the last holidays, the carnival holidays. So the kids were with that feelings that they didn't understand what was happening. It was still holidays, and how to keep the kids entertained at home and also keep studying. So I called the institute. We have a big institute here with 7 schools, like an umbrella for 7 schools, public schools. And I offered my help. And from, I don't know, day 5, we started already trying to bring all these traditional public educational infrastructure, Italian infrastructure, to digital. They were, now we are a little bit better, but they were completely analogic. Even the teachers, they didn't have social media profile. I mean, it's a little bit against here. They till now, or till the pandemic, it was something like against education here in Italy. I mean, social media and internet, it was something that public schools were trying to avoid. My kid was not allowed to bring any digital device to school because it would disturb the others. It was really a very old mind or traditional mindset. So in 1 week, we got to put all these classes online, first using Facebook. It was the main resource that everybody would get access theoretically for free. And after that, in a volunteering basis, we got a lot of companies supporting, and we got a platform that we went online. We got to buy with the donations around 70 iPads for the families would need. They didn't have the technology, and also Apple supported from California supported the project here. So it was a good interaction with the community. I was doing what I've been doing for the past 20 years, but I was doing in my community and much more as a citizen rather than an expert. It was a good experience too. Yeah, and it was very clear what I've been discussing my whole life, that smart city is about people. Smart city is a consequence of a smart society that is evolving. And here we could feel these in a very short period of time, but a boom. It was good in this sense.
Yeah,
if you can bring something good from the bad.
Definitely. And that's just a case in point, perfect example of how this technological infrastructure can be so important, especially in these times of crisis. Marcella, I want to ask you also how this pandemic has influenced your work. So you have kind of this angle, having to do with the UN. What's the situation at the moment with the UN when it comes to, for example, funding some of the smart city projects that are underway at the moment?
Yeah, I'll just first refer to the contrast between Italy and Switzerland. Here, they were fully connected. The kids started having classes from home. There was a little bit of a shutdown in terms of let's see what's going on. Lots of financial support. In fact, startups would get $1 million loans, or Swiss francs, which is equivalent to $1 million. Just as a COVID loan, close to 0 interest. I mean, the government was absolutely fantastic. It was clearly not the intensity and the scale of the problems that I had in Italy, specifically in Renato's region, but I was mightily impressed at how good they were at handling the situation here. Now, I do tend to travel. I guess Renato is one of the few people who travel as much as I do. We kind of compare our different flights. It's up to 95% of the time for me, and I've been to 125 countries. So usually I'm always on the road. And after Davos this year, which is at the end of January, everything was canceled, like starting with the Mobile World Congress. And that's usually where I catch up with Renato, and we could not do it this time. And all of a sudden, the United Nations here in Geneva shut down completely. I went there last week to try to get my accreditation, because I just joined an NGO accredited with ECOSOC as a board member. So I get the little blue badge, and that gives me higher level of access. And I even managed to convince the security guards to give it to me, even though I was not supposed to get into the building unless I had meetings, right? And those can be arranged. You can just call a friend and say, find a way of getting me in. But there's just close to nothing. Like usually when you look at the website or the board that they have at the entrance, there are dozens, if not hundreds of events listed. Now we have maybe 3, like things that absolutely must happen. They're all internal people. They're in the building anyway, and everything else got canceled. So today there's a big event that has been shifted online called the WISIS, the World Summit and Information Society. Everything is online. They decided to spread it over several months so that you have those gatherings, trying to gain traction and give people more time to revise whatever documentation is being discussed. But it's not the same. You don't have the dynamic, you don't have the serendipity, and it's really quite a shame, and it's having a major impact in terms of the efficiency of what the United Nations is capable of doing. And you have lots of sidetrack activities, right? So I'm at the moment planning several ways to catch up on this gap that has been created. One of the projects that I'm developing is sailing around the whole of the Caribbean, stopping in every single country and dependency with a group of investors. So in certain circumstances, so that if you're in a boat or in a series of boats and they respect distance rules, you could have those investors going from country to country, having meetings in hotels and meeting local entrepreneurs and government representatives to get back that mojo of meeting people and understanding if the chemistry is right, and maybe should have a follow-up conversation, and doing that in a very efficient way, so that spending maybe 2 or 3 months just sailing around a really nice region of the world, it shouldn't be too hard to get investors interested in doing that. I was talking about doing something similar in the Pacific, but the distances are too great. So in this case, it would be headquartered as an initiative in Honolulu, because we have some good connections there, and we'll be going to different locations in the Pacific, trying to bring business opportunities from the perspective of a smart city, right? So how can you finance solar panel replacements? And those conversations, they tend to take a very long time, and the pandemic is not making it any easier, because if you don't get to meet the right people with the right level of introductions, and you understand that this is a person you really want to work with, everything gets delayed. Delayed is not frozen. Right? You go like, nah, let's just talk about this later. We're okay for now, so no rush. When in fact there is a rush from a climate change perspective in many cases, or an efficiency perspective in many others. And that's one of the things that I'm working on. And from a personal angle, as Renata mentioned a little bit of what happened in the city, I live in a village with 750 inhabitants. We don't even have a supermarket or a church. Can you imagine, like, an European city that doesn't have a church? It's really quite small. And I used this opportunity to complete a project that I started last year, which is ended up being losing 250,000 calories, which is equivalent to 37 kilos. So it's about 40% of my body mass. So I'm a little bit slimmer than I was
I can see, I
last year.
almost didn't recognize you.
Yeah, and I used to have a massive beard like this as well. And this project is actually quite serious. So I just finished a 50-day fast, so 50, and I'm trying to combine extreme fasting with 0 calories, as in eating nothing for 50 days or 7 weeks, and then extreme physical exertion. So I tend to, when I did a 21-day fast last year, I did a marathon on week 2. So there was 2 weeks without any food, and then I do a marathon. And that was just to figure out, how it works. I'm talking about that because lots of people were impacted by COVID the other way around. They just gained the calories. I lost 250,000 of them over a year. And so 21 days plus a marathon was fine. This time I tried to do 7 weeks, so 50 days. and an ultra marathon at the end, and I managed to do half because I reached my limit. Then I started eating again, and then I did ultra marathon. And I'm training to climb Mont Blanc in 2 or 3 weeks before the season is over for this year. And the objective here is to go to certain extremes. When people say, "Oh no, I can't spend more than half a day without food," like I spent 50 days without food, and a week later I did a half marathon. I mean, on day 48 I did 25 kilometers, which is not nothing, but no, I could not complete my objective. And the point is, if a human who's writing an article or a book is capable of doing that today with all the measurements, with the super smart watch that tells me everything that is going on with me, and the impedance scale, and measuring the ketone and sugar levels. I even have a little thing here on my arm stapled that tells me what's my sugar level anytime that I want to know. So I have all this data. And the point is, diabetes, and we're getting into a different kind of disease here, but one that is very strongly linked to COVID morbidity. Diabetes is gaining 100 million people every year. And in the poorest countries in the world, if you don't have money to buy insulin, it's a death sentence. And
yeah, and actually, I
not-
want to. I'm sorry to interrupt you. We have just a couple of minutes left here, so I want to get into that point a little bit further. And Renato, maybe I'll start with you on this one. Having to do with the way that technology can be used to improve health, particularly in developing countries and in countries that are particularly influenced by diseases such as diabetes in the United States of America, for example. How can the smart city technology be used, to help improve health, both in relation to this pandemic and also these other existing health problems that are everywhere in the world?
Yeah, I think actually with the pandemic, I see three important trends that are they were just catalyzed by the pandemic. It was already happening, but now they are much faster. So first of all, we are going more and more and more local. So we had the globalization peak already reached. We have to rethink a lot, mainly the way that we are generating and distributing wealthy. And now I think that government and people will start focus more locally. It was already happening, now it's accelerating. Second, I see technology now, we are going to keep these virtual cycle of investments in new technologies, but on technologies that make sense to make life better. So probably very huge projects like leaving Mars or, I don't know, flying cars, they will not be so invested as, daily useful technology. You see now Zoom is worth more than the 7 largest air companies all put it together. So, and Zoom makes sense. So that's what I see. So we are going to be super local and hyper technological. And I think that this combination will bring us a lot of urban solutions and can enhance quality of life. And the last trend that was already happening too, but I see now getting, spinning off, is the trend of cities becoming very, playing a very important role in the world. Probably cities are becoming more important than the main countries. So you see the whole of London in Europe and in the whole Brexit. You see now, cities in the United States that are quite independent in the way they think and they act against Trump administrations, and so on. And now I see that we are also reaching a moment that small cities can also have protagonism. So the age of cities that we had, the city states that we had in the past, I think that we are coming on, and of course now empowered with all these technology. But just to conclude my point, we should bring together smartness with resilience. We saw that big cities they were referenced in the smart city ranks as London, as Barcelona, as New York. They suffered a lot with the pandemic because they had a lot of smartness, they had a lot of technology, but they didn't have resilient systems to face this problem that was a sanitary and health problem. But imagine if it was, for example, a pandemic, a digital pandemic, virus, or something like this. Do we have cybersecurity in this level of resilience to protect us against this? So I think that this will be a recurrent topic now in the smart city world.
Absolutely. And Marcelo, we have about 1 minute left. Do you have any brief thoughts in response to that?
I completely agree with everything you said. It's the overall answer. I am a big fan of the city-states concept. Italy has a huge tradition when it comes to that, right? So the fact is, all politics tend to be local, and when you don't have the mobility element, people stay more in the city. They care more about it. They can see the problems more. And they start taking action, as Renato did, as much as he could with the skills that he had. And I'm now trying to focus on making sure that once the wave is over, all the projects can be financed as quickly as possible. I'm in a task force organized by the ITU called the United for Smart Sustainable Cities, and those discussions are going on. So we're just trying to make sure that information keeps on flowing, and that we're enabling cities, smaller ones especially, to have access to the decision elements so that they can keep on doing things at the local level, building stronger, more sustainable communities. And once the pandemic abates, then the money to be able to do the bigger projects, massive replacements, larger scales, things that will require national, at least state level participation, they can be done quite smoothly. So yeah, what Renato said is perfectly aligned with my thoughts.
Okay, wonderful. Renato and Marcelo, I want to thank you so much on behalf of AIBC, and also just personally, it's been so interesting to talk to you. I wish you both all of the best in your pursuits.
Oh, thanks for the invitation.
Thank you very much, Rachel.
All the best for the event.
Well, a huge thank you there to Rachel McIntosh from Finance Magnets for sharing her insights and interviewing our two smart city experts. We hope you enjoyed that discussion. Now, next discussion that we have coming up is also a special one. Following extreme hyperinflation across Venezuela, Bitcoin actually acted as a beacon of hope for some and a concept that could solve the issues facing the Bolivar. So Peter McCormack actually traveled to Venezuela to see if Bitcoin could help locals and even earn them some income. Well, we have, moderated by Monty Mumford, leading journalist for BBC and Forbes, looking into this further. Let's take a look.
Defiant practices of payment. The true use case of Bitcoin.
Good afternoon. Sorry, good morning from the Sussex countryside, from a slightly strange recording studio, a caravan during a bank holiday in the UK. My name is Monty Mumford. I'm the co-founder of a new podcast on the Bitcoin and blockchain called BlockSpeak. We're doing very well. Probably haven't had as many interviewees as my guest, Peter McCormack, but I think we move in the same circles. I'm aware of Argentina's massive use of Bitcoin as a hedge against inflation, and also seen Africa rising in crypto as well. Well, what was it especially about Venezuela? Was it the fact that that is probably the country that's most in turmoil and threatened by an economic system in South America?
Yeah, exactly right. You're right about Argentina. If you go to Argentina, you explain Bitcoin to people, they naturally get it. La Corralita, which it looks like they're going to go through a second one, but La Corralita was a terrible experience for many people there. Not only were their savings wiped out by inflation, they couldn't actually access their money from the banks. So people in Argentina are very skeptical of central banks and sovereign currency in their country, and regular 30, 20, 30, 40% inflation. But it's a different level in Venezuela. I'll tell you one thing that's kind of interesting. Inflation there is so bad that when I went to one of the restaurants, on the menu, all the prices are stickers because they have to change them so regularly. They can't keep reprinting the menu, so they just replace the stickers with the prices. Venezuela often comes up as a case study. I've made multiple shows about it. So it just felt like somewhere that I wanted to go to as part of that trip to go and research it, and it was a very eye-opening experience.
I worked on kibbutzim, and well, there's a thing in Israel called moshavim, which is like $200 a month, working on a farm for 16 hours a day. People did that to get the boat back to Greece. That was a bit of a thing in the 80s, and I remember exactly the same thing with the menus and the sticky prices. You had to get to, as soon as you got paid, you had to get to Beersheba as quickly as you could to exchange it into dollars. So, what did you find in Venezuela? What did you find?
So I found a couple of things. I was based in two different locations. So I started in Colombia, and I went to the border there with Venezuela. God, the name of the town slips my mind right now. I'll have to look it up. But I went to one of the border towns to see what the experience was, because I heard so many people were traveling to the border from in Venezuela because they would come into Colombia to work, to buy things they can't get in Venezuela, etc. And so I went there just to see what that was like, just to get that experience. And then I went into Venezuela itself, into Caracas, and again there was a double experience there. But the border experience was very strange. There was a lot of people there, very, very busy, people desperate for work. So you would drive up to the border, and what would happen is, as you were driving up, people kept running at your cars, like these kids, and what they wanted was, there are these smuggling routes that are controlled by the paramilitaries, which allow you to smuggle goods into Venezuela, because if you go through the official checkpoint, there's certain things you're not allowed to bring across. So you have these paramilitaries controlling, Colombian paramilitaries controlling the access routes into Colombia. And so you maybe want to get something into your family, so you would pay for that. Then there's a lot of people just sitting around, hungry. I met this guy who'd gone there with his wife and his baby to try and get work, and for a week they couldn't get any work, and they were literally sleeping on the street. And they needed work because they were desperate for food for their family and their other children back in Venezuela. So that was there was that, and then there was also people who somehow did have money, who were coming across from Venezuela just to buy all different types of basic goods. It could be anything from sweets to biscuits to toiletries to toilet paper. Like, I would see somebody walk back with a massive sack of toilet paper. So there's this weird little economy that's built up there, and there used to be a Bitcoin ATM machine that's not there anymore. But the bigger experience was going into Venezuela itself, and Caracas essentially has two sides. It has the middle class side, which is, again, I have to go back by memory. I could have these the wrong way around, but East Caracas is like your middle class cosmopolitan side, and West Caracas is your very much your Maduro controlled population, and they're both very different. One side is posters of jeans and Coca-Cola and shops and hotels, feels very modern, and the other side is very run down, and murals of socialist propaganda from Chavez to Maduro. And the reason this was important to go and see and understand the money is there are multiple currencies in Venezuela. There is the dollar, there is the Colombian peso, there is the bolivar, there is Bitcoin, and I think there's another currency, but maybe those four are the primary ones. Oh, and
so you have a typical city. I think it was George Bernard Shaw who said that for every yard of West End, you create an acre of East End, i.e. you need the East to serve the West. It sounds like a very similar London story, West End of London and the elite. So you have a number of currencies that are accepted, including Bitcoin.
Well,
I want to get down to
use.
Sorry, I missed that.
So a number of currencies people will use. Let's put it that way. Not accepted, because it depends on the scenario you're in or who you are. Like, a lot of people will want the dollar because it holds its value, but some people can't really use the dollar because they don't have the decimal denominations, and they're living on maybe $4 or $5 a month. So it's very difficult for them perhaps to use the dollar. So perhaps they tend to be more. Again, it tends to be like a middle class v working class thing. If you're middle class, you probably have more access to the dollar. It's more usable for you. But if you're living on $5 a month, you need you need decimal parts of the currency, so you can buy things that cost 5, 10, 15 cents. That might be food.
But how is? I'm still trying to work out what you found. You sound so far? It sounds to me like you did some reportage at the border. You saw human misery. That's the type of stuff that I've done before, and it's sometimes quite a difficult situation to be in because you have more money than they do, and you feel like you're witnessing poverty porn. I'm not suggesting you're doing that. Then you moved into Caracas, and there's East and West Caracas, but I'm struggling to find out what you found about Venezuela.
So the key thing. So people talk about Bitcoin being able to help Venezuelans, and yes, if you are. We're talking about very small number of people who can really benefit. So firstly, you have to have enough money to be able for it to be worthwhile. So if you're living on $5 a month, even if you wanted to buy Bitcoin, when transaction fees are $1, $2, $3 for a transaction, I think it's absolute common sense that this is completely unusable for these people. Anyone who says it is, I think they're too far down the Bitcoin rabbit hole and want it to be something usable. Now, if you're in East Caracas, you're middle class, and you have a certain amount of money, it makes sense for you to have Bitcoin, because even with 10% weekly inflation, whatever Bitcoin price does, whether it jumps up or jumps down, over the long enough time frame, you're outperforming. You're outperforming the negative side of the inflation, the debasement of your currency. So what you find is that, like, there's one guy I was hanging out with. He holds all his money in Bitcoin. And all he does every week, he knows the amount of Bolivar he needs, and he just transfers that back into Bolivar. But all the work he does, he gets paid in Bitcoin. So he's constantly growing his Bitcoin stack, and he's just releasing how much he needs each week to survive, to go and buy things around the city with the Bolivar.
Yeah.
But he is a technical guy who runs a technical business who understands Bitcoin. So the people this is useful for are people who are middle class, have enough money, who have access to the technology, have the education, the experience, and the network, and everything you need to be able to do that. Great. Now let's talk about everyone else who's living on, which is the vast majority of people in the country, live on $5, $6 a month. Firstly, some people don't even have access to a phone. Some people are sharing phones. Okay. Most don't have a computer. So if they want Bitcoin, it's going to be on their phone. If they have access to a phone, they might not have access to data. So you do have sometimes rolling blackouts across the country. And even if they get past that, like I say, the fact that they're living on $5, maybe $6 a month means they can't use the base chain for Bitcoin because the transaction fees are too much. Now, yes, perhaps they can use, perhaps they could use Lightning Network with lower transaction fees. Of course, that's a possibility, but you have to also then have other people willing to accept it, which isn't particularly a large number of people. And then add into the fact that Bitcoin can be volatile. If you're living on $5 a month, yes, if you can hold Bitcoin long term, great. But if you're somebody who's living hand to mouth every week and there's suddenly a 20-30% drop in the price, that's maybe the difference between you eating or not. So yes, Bitcoin can help Venezuela. Yes, there's certain people it can help, but Bitcoin doesn't fix Venezuela. What fixes Venezuela is moving on from the Maduro regime, which is holding the country to essentially hostage, and that's the bigger problem, and that's the bigger problem that needs solving. I just think it's a certain number of people can benefit, great, but it's not going to help the poorest.
I think there was a quite famous picture when oil oil futures went down to zero, and there was a picture of a massive tanker, and it said you can buy this for 2.5 Bitcoin. Which is amusing and all that stuff. But the problem with Venezuela is oil, right? I mean, the price of oil, if that keeps on going up, whatever Maduro's strangling it with, I mean, that's clearly a much better hedge than Bitcoin, surely.
I mean, it depends. Oil's a tricky thing for Venezuela because it was the backbone of Chavez's economic policies when he came in to power. His populist ideas about supporting the poorest was based on the fact that I think we're at $120 or plus, even over $100 barrel of oil. The problem is when the price of oil dropped I don't know the actual dates, but let's say just towards the end of Chavez's life, because it was towards the end. He died in power.
Yeah.
They didn't have money left to fund the huge social programs they were doing, and because of that, that's why they ended up printing money, and that's why they ended up with hyperinflation. Now, another problem they have is the infrastructure to access oil. While Venezuela has a lot of oil, and again, I could be correct on this. My understanding is they have a certain type of oil that's expensive to either to dig up or to refine. I'm not sure what it is, but it's expensive. It's like they don't really have the infrastructure anymore, and with a crumbling infrastructure, very difficult for them to do that. So
they've become almost they've almost become a fracker.
Well, the other problem is the sanctions in place that makes it difficult for them to sell their oil. That's also difficult.
Yeah, absolutely. No, quite. So you'd previously broadcast a lot about Venezuela. So it sounds to me that you didn't really find a great deal, with the greatest of respect. The rich have got it.
Well, no, I did actually. No, I disagree with that actually. So I had done at least 3 shows on Venezuela, and I had seen it as a great opportunity for Bitcoin. I was like, everyone there should just buy Bitcoin because at least it'll protect themselves against inflation. And what I found is that actually, no, Bitcoin is very much and I guess this is across the world really, but Bitcoin is very much I think it's more of a tool for the middle class and the middle to upper class in poor nations, and then perhaps also working class in like more westernized nations. But it actually made me realize that the problems are way bigger. And when I hear people say, "Oh, Bitcoin can fix Venezuela," it actually kind of irks me now because I've been there. I feel like I can actually at least give some reality. So no, I disagree with that. I think I actually found it. I think that was it was a useful exercise.
No, okay. So the fact that you thought that previously, before going there, it was going to fix it, now you know it can't, and it follows pretty much like money anywhere else in the world. I mean, every time you were talking, I was thinking about M-Pesa, the mobile money solution in Kenya, which basically set fintech alight around the world, and especially where I kind of spend most of my time in London. We're coming to the end, which is a shame because I could talk. We should be in a bar somewhere in Caracas or Somaliland, swapping stories. Obviously, you're a man after my own heart. So, as far as Venezuela goes, the future, nothing's going to really change apart from the fact that the middle classes are going to be able to play around, be able to cross the border and buy those toilet rolls, be in Bitcoin long term. But the masses, the Vox Populi or whatever you want to call them, it's not really an opportunity for them at all because they're too busy trying to find food for their children.
Yeah, I mean, I think it's a little bit nuanced to that. So yes, it will continue to grow. I think it's a huge opportunity for the middle classes within Venezuela, and I certainly think there's people there who can then educate people across the kind of poorer communities in Venezuela. The other problem you have, just to throw into the mix, there isn't a culture of saving in South America, especially in Venezuela. Yes. So without that culture, the money is really just a medium of exchange. I mean, certainly some people could be educated. Some could certainly learn more. Perhaps you will see some kind of like spots of usage, but I certainly don't think it is the solution that people think it is.
Well, I think you've convinced me. I think you've probably convinced this audience as well that it's not a panacea like many people think it is. And all of these, as you say, have such deep nuances, no one knows where it's going to go. But basically, transaction fees have to go down, and exchanges should note that unless they want to create a kind of, I don't know, an elite, then it's supposed to be decentralized, right? It's supposed to be cheap for everyone. It's supposed to be low transaction fees. That, in my opinion, is the problem.
No, I did. Sorry, Monty. Sorry, I wouldn't want to end on that because I actually disagree with that. Yeah, transaction fees. Sorry. Transaction fees are a function of a block size, which is like a free market for buying space in the blockchain. If every attempt to try and get prices down artificially, by other projects and forks has always proved unsuccessful. The fees exist. That's the reality of what it is. If we want lower fees, then hopefully we move more people to the Lightning Network. But I don't think it's a case of trying to force down lower fees. I think that would be destructive to Bitcoin itself. Sorry,
Fair
I just
enough.
didn't want to close.
You put me in my place, and I think as the interviewee, that's your privilege, sir, and I accept it. I'm Monty Munford. I'm the co-founder of the podcast Block Speak. Peter is an intrepid traveller, and his podcast is What Bitcoin Did and Defiance. Pleasure to speak to you, Peter. Have a good day. Bye-bye.
Well, a huge thank you there to Monty and Peter. For those that haven't watched Peter's documentary yet of Defiance, I do firmly recommend, especially his episode on Venezuela. It gives some really interesting insights into the future world of cryptocurrency. Now, our next topic at hand is decentralized finance, or DeFi, one of the biggest buzzwords that we have heard about in 2020. The industry started off at $1 billion at the start of the year and now totals around $8 billion US. But are you too late to get involved? Well, we have a poll available for you to participate in on just that.
Minha pergunta para vocês. Você está investindo DeFi?
So the big talking point of are you investing in DeFi? We're asking you all this question on Swap Club platform. We'll be reading the announcements out later on today. And if you're not yet sure whether or not to invest, take a look at this upcoming panel to see if it will help you with your decision.
Once again, muito obrigado ZBX por nos patrocinar.
Dare to define what's the return on investment?
Hi, Jose, Scott, Christian. It's good to have you here today. So the topic is about DeFi, decentralized finance. I mean, quite a big buzzword these days. So we are going to try to go a bit all around the topic. And just for those that may not really be aware about what decentralized finance means, maybe Jose, you would like to start by giving us an overview about what is DeFi exactly.
Yeah, sure. So decentralized finance, there's a couple different definitions, but I think ultimately it's financial infrastructure that's owned by internet users. That was kind of the best definition I saw on Twitter the other day. So a lot of finance is middleman. So it's kind of connecting supply of capital with demand for capital in various different ways. That's normally done by large institutions that we call banks or insurance companies or whatever else. And with crypto, it's kind of replacing that with crypto economic incentives that allow a network of kind of disparate actors all around the world to collectively provide these services that were previously being provided by centralized institutions.
Okay, good. Thank you very much. And Scott, maybe you want to let us know a little bit more about what has been the evolution of decentralized finance and why all of a sudden it's such the buzzword of 2020.
Yeah, great question. I think there's many reasons why. If you look at like decentralized finance being, in the simple sense, basically merging the emergence of traditional banking services with decentralized technologies, and DeFi really having the potential to replace existing financial services with the add-on of decentralization. Mm-hmm. There's many advantages of that. So like DeFi apps don't require any intermediaries and therefore don't need any arbitration from any third parties, removing counterparty risk, that being one of them. Mm-hmm. Smart contracts with these DeFi protocols, they resolve all possible disputes, and users control their own funds. So I think that's really crucial to what's happening in DeFi. You're not reliant on a third party or an institution. You hold your own funds all the time, and your own custodial. All these things are actually reducing the cost of providing that service, and just being a more transparent system.
Mm-hmm. Yeah, I think now it represents something like $9 billion US. If I'm not mistaken, I saw something recently. So, I mean, it's quite a big jump compared to what it used to be. And Christian, would you like to let us know a little bit about, I mean, what, from your view, are the main advantages of DeFi and what have been the best application or use cases you've seen in the last couple of months?
Yeah, I think from my perspective, a lot of the advantages have been about DeFi being somewhat permissionless. I also think that there's been a lot of interesting developments because it's been so experimental. And so developers are able to iterate quickly and build quickly so that they can present something new to the community. And then the community can start to analyze whether there's any value associated with that project. And so I think we've seen a lot of interesting vegetable named projects lately in DeFi, as well as other food token types. And so I think that's mostly what I've been paying attention to. And I think it's really interesting.
Mm-hmm. And what would you see as the limits to decentralized finance?
Yeah, so I think in terms of the limits, it's very much within that nature too. I would maybe point two things out. It's been very experimental and very circular. And so when I say experimental, I mean that it's somewhat like the Wild West. So sometimes projects are building so quickly that they forego an audit, or they'll just launch very quickly without having a gradual release of the project to make sure that funds are okay. And so I think this is okay, but over time, there's going to be, I think, a major risk, and some funds might be drained from a specific project, but I think people have forgotten what that's like for a couple of years now. And on the point around it being circular, it's just that a lot of projects are integrating with each other to essentially have funds go in a circle, and they're not really building for mainstream DeFi. And so I think they need to build out from the current user base that exists today within DeFi.
And we see many people are actually mistaking open banking and open finance, which is DeFi. Could you highlight the main differences between both? Any of you three?
Yeah, so I mean, the difference between open banking and DeFi, open banking, like as we're quite familiar, it's pretty predominant in Europe, London being one of the havens for open banking. With lots of like the new fintech companies utilizing that to essentially open up and enable different startups, etc., to build financial services. I think that's different from DeFi, where that's really you're trusting in an entity. You're still trusting in a group of intermediaries or an institution in the background. What's happening with DeFi is it's really peer-to-peer, or now moving more into peer-to-contract. So you're trusting in the code, you're trusting in essentially a smart contract.
Mm-hmm. And well, each of you, if you had, sorry, Jose?
Just to add to that quickly, I think that was a great explanation. I think another of the big differences between sort of DeFi and open banking, and kind of between crypto and all its competitors, is just the permissionlessness. You know, where these are whereas money and lending and all these primitives normally are sort of closed databases, very permissioned databases that you need certain licenses to access. Crypto transforms them into sort of open primitives that anyone can compose together to build new applications and that anyone can access. And I think sort of the innovation that unlocks is what we're seeing now with all the kind of vegetable and food named coins, but also with a lot of other cool stuff that's happening. And the innovation, you even see it with like some of the centralized products that are building on top of crypto, like Binance, right? And others. They're launching sort of their product release cycle is so much faster than the fintech incumbents. And obviously the fintech incumbents is even faster than the banks. But when money is an open API, like, you know, Binance launched sort of 6 new products last year, you know, from futures to options to, it's just unseen in fintech previously. And I think that's the real power of this technology.
Mm-hmm. Good. And Christian, if you had to choose and highlight only 3, like the 3 most promising DeFi platforms, which one would it be?
Oh, that's a tough question. I mean, I would probably make it easier on myself and probably pick some of the projects that already have a lot of value locked within them.
Yeah.
And so I would maybe think of something like Aave, Curve Finance, and I mean, I personally do like Uniswap and Synthetic, so I'm a little torn on what I would pick there, but I think they both have their merits and they're a little bit different in what they offer. And so I think for me, I'm perhaps a little bit more interested on the automated market maker side of things. So I would reference both Uniswap and Curve there. But I think the world of synthetics is very interesting. And so projects like Synthetic or UMA Protocol are building something that can capture a lot of value over time. And so I think these are the types of projects people can start to pay attention to if they're not already.
Okay, Scott, what would be your 3 picks?
Yeah, definitely going down the decentralized exchanges, automated market maker route, like Curve and Yield Finance are 2 really interesting projects. Actually, and back to your point about Uniswap, I saw that Hayden Adams, the creator of Uniswap, just announced yesterday on Twitter that their 24-hour trading volume just exceeded Coinbase for the very first time. So we're seeing these automated market makers like really enabling a place where they can connect buyers and sellers together without having that, like, I guess, intermediary in place or centralized aspect in place. I think that's going to grow and keep growing tremendously.
Jose, what would be your 3 favorite ones?
Yeah, I think for me there's kind of a separation between projects that I think are going to grow a lot and create massive value, and projects that I think can capture it. And I think there's sort of a subtle difference there, where with, for instance, AMMs, I think AMMs will continue to grow like very fast. You know, we've already seen Curve become cheaper than centralized exchanges for transacting stablecoins. We've seen 1inch at times do that. You know, when you at least for big transactions because of gas costs. I think that'll continue to happen. I think the issue is how can they capture value, because with AMMs, this is open, and with crypto generally, this is open infrastructure. So the liquidity is a moat because it gives you better execution. So it allows you to beat your competitors. But once you start charging a fee on top and trying to capture some of that value, you're detracting directly from your moat, you know? And liquidity is kind of, it's undifferentiated supply. Like, you know, most traders don't care what UI they use, they care about best execution. So I'm quite interested to see how AMMs actually end up capturing value. And for me, it has to be differentiation on the supply side. So providing a unique, because if the traders aren't the customer, then your customer is your liquidity provider. And I think that platforms that give a great experience to LPs are the ones that are going to win. So I'm really like Balancer. And then disclaimer, sort of as a fund, we own both Rune and Nexus Mutual, and those are the 2 others I talk about, where Rune, you know, building sort of cross-chain AMM architecture with a token model that makes sense. You know, we've seen how Curve can drive stablecoins to be cheaper than centralized exchanges. I think Rune will show that can happen for a pair like Bitcoin USDT as well. You know, and that's a huge use case. It has more volume than all of Ethereum. You know, the 24-hour volume. And then NXM, Nexus Mutual, for me, decentralized smart contract insurance. You know, there's 9 billion, as you mentioned, locked up in DeFi right now. And there's less than 0.5% of that is currently insured. And I think for the space to grow, as I think Christian said, people have forgotten about the hacks. They've forgotten about the DAO hack, but it's only a matter of time until one of these food coins gets hacked. And I think that the percentage of TVL that's insured will keep going up. Nexus is the only game in town for that. It's really well designed token economics. So yeah, I'd go for those 2 with the disclaimer that I own them, and it's not financial advice, obviously.
Okay. And well, Christian, another one for you. I mean, basically, like for ICO, what happens, and a lot of countries obviously wanted to regulate it. Do you think DeFi is going to need some kind of legislation to be adopted more by the masses? Or will we see some kind of autonomous organizations who are going to use autonomous systems as to be able to make those assets available to everyone? And does the technology as well enable it to be regulated?
Right. I think that's what's difficult. I think to the most extent, quality projects today have tried to self-regulate to the extent that they can to operate in good faith. But these protocols are obviously permissionless, and we've seen projects like Compound start to gradually and almost entirely hand over control to the community. And once that happens, it's a little bit more difficult for a regulator to come in and point fingers. To some extent they can, and I fully expect regulators to say, you know, hey, what are you doing? How do we stop this? And dig a little bit more into it. But I think over time, we are building the frameworks for organizations to essentially be able to govern themselves without any centralized party, whether that's some kind of entity like Aragon building DAO kind of infrastructure. It's all being built out, and so I think it's only going to become more difficult over time. But I'll let anyone else chime in too if they have any thoughts.
Mm-hmm.
Touching on quickly on the regulation question, I think that the ideal scenario for me there is that you have some of these decentralized protocols acting as the infrastructure, and then you have like some centralized user interfaces that are regulated and that actually bring this to the masses, you know, with the protocols being the infrastructure that they use on the back end. I think that would be the optimal kind of scenario, and I think the centralized entities will be regulated. I think it'll be very difficult to regulate some of these protocols just because of how they're built, how decentralized they are, how many sort of legal issues that they bring up. But I think that the government will definitely try. Governments around the world will definitely try, especially when you're talking about AMMs and transferring money without KYC and all that. It touches a lot of very sensitive, anti-terrorist, anti-money laundering regulations that are also there for a reason. So yeah, it'll be interesting to see how it plays out.
Mm-hmm. Yeah, and do you think, we're going to be able to kind of leverage those limits? It's not going to be a break to being adopted, that DeFi is being adopted by much more entities?
Yeah, from my perspective, I don't think so. I think the sort of game theory of it is that countries that ban it miss out on the innovation that it unlocks, and all that flows to another country. So I don't. Obviously, someone like the US taking a very negative stand against it would be bearish for the industry and for innovation, especially given how much comes out of there. But I'm kind of hopeful, especially given the changes we've seen recently, like to the accredited investor rules. Letting people not have to, not just the rich get richer, but you can actually prove that you know enough to be an accredited investor as well. Hopeful that there can be an innovation sandbox or some regulation that on the centralized company side that makes sense. But yeah, I'll let the others chime in there as well.
Okay.
Yeah, I think maybe I would add that, to some extent, we've seen some teams already build somewhat pseudo-anonymously. And so this might be something that would grow over time if countries were to take a more negative stance against these kind of protocols. And so I think one example has been, there's been a resurface of Basis, the kind of stable coin idea that previously returned money to investors after it deemed that it couldn't really operate in this regulatory environment. And it seems like that's resurfaced with a pseudo-anonymous team. And so interesting to see how that plays out.
Okay, and we are running out of time now. So just a last question. Would be about the evolution of DeFi, and do you think it's going to be overcoming all its limits and just ensuring that we don't replicate a second DAO case scenario?
Yeah, maybe I can start off. I think I referenced, some of the limits related to it being experimental and circular a bit. I think that, we've talked about there being a second DAO case scenario, and I think that will happen. Ultimately, I hope the community learns from that and kind of continues to grow from it. But I know there are entities already that are starting to tackle some of these issues. I think one is Fair Launch Capital, in the sense that they want to provide projects the ability to provide an audit and launch with a little bit of more security, and ultimately have that team paid forward to the next project that would do it. And so I think DeFi has shown its ability to overcome some of the limits already, and I have no concerns about it being able to adapt over the long run.
Okay.
Yeah, I'd agree with that. I think adaptability is something really crucial in DeFi, and it's happening tremendously. I think the governance aspect around it, and actually enabling some of these projects and token holders to govern what happens in these protocols, voting rights, etc. I think that's a really interesting concept. So I think that will play out and be advantageous to what's happening in this space.
Okay. Well, thank you very much, guys. I think we arrived to the 20 minutes. Thank you for your expertise and the nice chat we just had.
Thanks very much.
Thank you. Bye.
Well, a huge thank you there to Beatrice for moderating the panel, and to our speakers for their fascinating insights on the world of DeFi and the future potential that it holds in the blockchain emerging tech industry, but also on the global perspective. Now, our next set of discussions will be taking a look at government implementation of a state-backed digital currency. Let's take a look in more detail. Well, now it's time for our next set of discussions, and a big thank you to our sponsors already of the day. We've had Chile so far. Next up, we have ZBX as one of our official sponsors. Now taking a look at state-backed digital currencies and looking at the example of the Petro in Venezuela and seeing the potential that it could hold in the industry. We have some financial experts and also some experts in the emerging tech and cryptocurrency sphere, both sharing their insights and opinions. Let's take a look.
Petro, government integration of the state digital currency.
Well, we're taking a look now if government should issue central bank-backed digital currencies for the benefit of the broader economy. And joining me, we have Gavin Brown and Richard Ells to take a look at this and more. So, gentlemen, first of all, thank you both so much for joining me on the line today.
Thank you very much.
Pleasure to catch up. And Richard, I would love to start with you because focusing really on what Electroneum does do and the points that it covers, really empowering people through the use of digital currencies. What's your thoughts on a government-backed digital currency?
Well, I mean, the concept is great, perhaps. I'm not sure. I think the basic concept of cryptocurrency is that it isn't controlled by central government, and that's what makes it so wonderful. This is a decentralized platform, and as such, there's no central authority to make, let's say, some interesting decisions about fiscal policy. If you look at central governments, they always have a tendency to discover at some point in the history. Sometimes it takes months or years or decades or centuries, but eventually they realize that there's a money printing machine. And then they go at it as fast as they can, as far as I can tell. If you take a look back at what the pound was worth or the dollar was worth 100 years ago, there's been a reasonable amount of inflation, quite a large amount. But if you look at some other currencies around the world, of course, we've seen horrific hyperinflation. And what I personally like about cryptocurrencies is the fact that they're not controlled politically by any particular central authority. So if they come up with them, it's going to be jolly interesting to see what the maths are behind them, and are they going to be making them digital gold, or are they going to make them just a digital way of transfer? Haven't we got Visa card and MasterCard for that? So it's going to be interesting to watch.
Absolutely. And Gavin, I'd love to turn to you now, because if we look at Venezuela as an example and as a use case, it is backed by oil reserves in the country. So when we look at these digital currencies that are government enforced, that are then backed by real world reserves, what's your take on this from an economics standpoint? How do you view the structure?
Yeah, I think it's certainly a very interesting, again, always a very interesting use case to come forward. I mean, this is, if you look in the context of the Petro in Venezuela, again, slightly unusual in that this was a government sponsored initiative. This was government endorsed, but against the backdrop of the broader sort of global community, was very much something that was being done to try and generate additional value and create wealth in terms of the country, beyond that of the various restrictions that were being put on it, particularly from the US, but also by many other countries globally as well. So you can certainly understand why they wanted to do that. I mean, especially given that, this is a country with oil reserves right up there with the likes of Saudi Arabia. And obviously it was being backed by oil reserves, but not oil in the sense that it was already extracted from the ground and in a deployable form, but rather in a oil reserves in actually where the oil is still physically in the ground, which presents an extra layer of risk and an extra thing to consider. I think, though, when you look at the broader piece around central bank digital currencies, it is a sensible thing to explore, and central banks are obviously exploring it already. The Bank of International Settlements, or the BIS, which is almost the central bank of central banks, has already conducted various surveys and said around about 70% of global central banks are already actively exploring this type of technology. In terms of why they're doing it, I think a lot of this is about trying to hedge the risk around true decentralized cryptocurrencies. As Richard said there, that they're really, the decentralized argument is in that kind of community-driven projects and coin issuance and monetary policies. Whereas if you're a central bank, that's a direct threat to your existence. If these the likes of Bitcoin and various other altcoins eventually get much bigger than they are now, they pose a direct threat to your ability to create and manage monetary policy in your country. So it's a perfectly legitimate and sensible play, I think, to try and explore CBDCs, although they're still being done, apart from perhaps the likes of China, in a very cautious way, I would suggest.
And that's a really interesting point there, because we have at some point today, we have Dash joining us as well. So Dash and Bitcoin are other digital currency alternatives there, as you've mentioned, across Venezuela. And how do you think, and Gavin, I'd still like to ask this to you, how do you think a central bank should react then for a non-native digital currency that is coming and potentially gaining popularity in a region like Venezuela, which is struggling economically?
Yeah, I think the if we can call it a business case, the business case for a currency like Dash or a Bitcoin or a similar sort of offering is much stronger, obviously, in a country where the fiat currency is failing. You know, Richard mentioned before about hyperinflation. You know, if you're in an environment where your currency is particularly volatile or experiencing hyperinflation or near hyperinflationary environment, then it suddenly becomes a bit more tenable and a bit more interesting to pursue something which is controlled by codes and not by politicians and monetary policy committees, etc. So I can certainly see why that then becomes much more important and much more relevant. Again, though, the problem is that to what extent will countries and those central banks permit these things to become regulated, and indeed even whether their permission is required. You know, is it the case that, similar to many other kind of broader political and social changes we've seen, if this thing happens from the ground up at some point in the future or even in the near future, then you know, that their endorsement or regulatory approval may not indeed be required. Although I'm perhaps not going to predict exactly what will happen there. I might leave that to Richard, although in the UK we call that a hospital pass when you give a difficult question to someone else.
And Richard, I would like to turn to you from a personal approach of Electroneum. Electroneum has reached into many countries where people are unbanked and are looking to kind of have some economic salvage, as it were. So from your perspective, how's ETN really combated this central bank and maybe this regulatory issue, and how is it moving forward?
Yeah, well, we've embraced a regulatory environment, and we're indeed at the sort of cutting edge, I suppose, of that in trying to forge forwards and make a regulatory environment in which cryptocurrencies can thrive. But we're a sort of a halfway house in many respects. That most cryptocurrencies that are out there that are pure, in essence, let's say Bitcoin at least. I'm not entirely too sure that I can say that about all of them, actually. There's plenty of them that would seem utterly decentralized, and perhaps they are, perhaps not. But ultimately, what we're trying to do is we're trying to come in the middle and say, look, cryptocurrencies can solve a lot of problems, and mostly that is being able to move tiny amounts of value around the world really, really simply. There are lots of other plays, of course, out there in the cryptocurrency landscape, but certainly from our perspective, what we've thought is, will a government, and we've engaged with a number around the world, but what a lot of governments are afraid of is what will cryptocurrency in general do to their economy. Now, a lot of people in politics in these countries are afraid of capital outflow. So cryptocurrency makes a very good, Bitcoin specifically, let's say, very, very good vehicle for exiting value from that country and getting it out somewhere else. And I totally understand these countries have had capital controls for years and years and years. So suddenly you've got a new vehicle for getting money effectively out of the country. Now, from our perspective, it's a really obvious use case that it's bringing money into the country. I don't think that that's enabled us at this point to be embraced fully by any government around the world particularly. But what I will say is that they do seem to be more tolerant of the concept. If we are bringing value into the country, and I'm very careful to not say money when it comes to cryptocurrency, but if you're bringing value in, if you're bringing something that has a value into that country, rather than it being capital outflow, I suspect from a regulatory point of view, what do they want? They want people to be able to earn. Potentially, they want to be able to tax them. They want to be able to grow economically. So I think cryptocurrency is not just Electroneum. I think any cryptocurrency could be put into that situation. The reason that we've moved forwards the way we have is because we've embraced that regulatory environment. But at the same time, I'm a bit of a libertarian myself, and I rather like the idea of you being able to have absolute control of a decentralized project, and you can use it how you want, and the government can't do anything about it. But what you must remember is that in these countries, In the UK, if you did something, let's say you pirated some videos, that's illegal, and yet loads and loads and loads of people do it. They download pirate videos from the internet, even though they're not allowed to. There is a very strong regulation that says you can't do it. If you start using those, as you could get cut off from the internet, you could perhaps go to jail for it. But the reality of it is, in a Western society, you're not going to go to jail for it. A lot of places, they're quite terrified of the authorities. So, you know, using Bitcoin they might genuinely think, if I use Bitcoin, a van's going to turn up and my family are going to be bundled into a van. It's very different to where you and I live. So there's lots and lots of things to think about. We're still such early days for crypto. I can see why they're all flapping around thinking that a central bank cryptocurrency sort of digital currency is the answer, but I don't necessarily think that it will be. They're still going to then have exchange issues and political issues. Can you use it? Would you be using, you know, a digital bolivar or digital any other currency to move money around the world or value around the world? You'd probably use another crypto asset and then exchange it within that country. So there's lots to learn yet.
And you've both touched on something a little bit there, which is very interesting. And Gavin, I'd like to turn to you and ask, from the point of view of Venezuela and the petro, from a store of value, when other countries are considering it something which is a potential store of value, has the petro accomplished that, or is that a challenge which they haven't actually managed to overcome, and a big hurdle actually, if they are looking to have it as a circulating almost money replacement?
Yeah, I think in terms of from what I've read and the data which has come out of the country, broadly speaking, it's not been a huge success in terms of mass adoption and mass usage. However, what I would say is that it's not been a failure either, in the context that, you know, this is something that wasn't just an idea and talked about politically. It actually made itself all the way through to implementation and creation, which is a lot more than can be said for many other types of projects which either corporates or nation states talk about. So I think it's probably somewhere in between the two. I think it's, as we said before, it's not perhaps surprising that, you know, a country such as Venezuela was one of the first to do it. It made a lot of sense, given that it had so much significant reserves and yet was suffering significantly economically and sociologically as well. It obviously made a decent attempt in the current political environment to try and extricate some of that value and create that value by the use of decentralized, well, not decentralized, but the use of tokenization. As to what that might mean then for the legacy of currency and currency creation, obviously we could find ourselves moving towards, you know, CBDCs have many other types of ways they can be created and designed. We could move back to an almost quasi gold standard type CBDC, where we have a fiat currency which is being hosted on a DLT platform, but with some kind of asset backing, whether that be a precious metal or something else of tangible and verifiable value. But I think the bigger thing around CBDC, just kind of moving on from Venezuela slightly, is the idea that, you know, that this only has relevance to economies which are struggling or failing in some way. Because, you know, you look at the likes of let's say in the US, about 6% of US households have no primary bank account. It's about 14 million adults across the entire population. So when, for instance, COVID came along and Trump and the administration started to issue checks being sent out to individuals in order to try and support them rapidly, they weren't able to do that very easily, because they still had a large proportion of the population was either unbanked or underbanked. So one thing that I find quite interesting is the financial inclusion argument around CBDCs, where it might not be a full CBDC as we might expect, but rather a digital bank account which is hosted by your central bank rather than by a commercial retail bank. Now, there's lots of negative implications to that as well, around disintermediation of the banking sector and what that might do if there's ever a run on the currency in some other way. But I think it does raise the general interesting idea around what, I mean, people tend to refer to this as digital dollars, and what that might look like potentially for an economy. And although it's not a cryptocurrency and it's nothing nearly as kind of free and libertarian as Richard was talking about before, you know, at least it's a step in the right direction by bringing in the masses of people who are currently outside of the financial sector in terms of being serviced, not because of their own choice, but merely because of their particular demographic or the way the financial services industry is structured in their sort of country of domicile, really.
And that is a very interesting point, that typically you would link and associate the necessity and requirement for digital encouragement from government digital assets because of economic mismanagement, also oil dependency, like we've seen in Venezuela, also in Brazil. So the Americas really have been a prime example use case when it comes to this topic. But as you've mentioned there, the US, and Richard, you were nodding along about just the amount of countries which have a very surprising amount of unbanked population. So Richard, this is something that Electroneum also works quite closely with. This is an example for countries like Venezuela, or digital assets government enforced could be for other countries, maybe more Western as well.
Yeah, I mean, the term unbanked is an interesting one in itself because it leans heavily towards the banking industry, banking them. And actually, a little bit like other technologies where we've seen the developing world just skip whole technologies. Why not just skip the whole banking thing altogether? Well, why be banked? So you're still unbanked, but if you've got access to a range of financial services and you've got access to digital payments, you don't need to be banked. So it's a sort of we're not quite there yet, but you can almost live without the banks. And then you wouldn't ever need to worry about being unbanked because you have everything that everybody else has. You have the same facilities, but you're using it in a digital way. So certainly a local digital currency could solve a lot of those problems. But as you said, Gavin, the fact that it's sitting there centrally controlled, even if it is pegged to something. So let's, for instance, say that it's backed by oil in the ground. We've seen over the last few years a halving and then a halving again of the oil prices around the world. You wouldn't recommend to anybody that they took their life savings and invested in any one thing that's not diverse basket. So you wouldn't say, oh, why don't you buy oil stocks or an oil ETF, put everything in it. Because unfortunately, if you peg to anything, whether it be precious metals or petrol in the ground or oil in the ground, you still have a bit of an issue, which is you don't know what the global supply is, you don't know what the global demand for those things is, and thus you are stabilizing against something that is inherently unstable anyway. One of the things about Bitcoin that made it the thing of beauty that it is the fact that it's not backed by anything. It's backed by mathematical scarcity. So why is gold valuable? It's only valuable because of its scarcity, and because it's shiny, perhaps, and doesn't tarnish. So over the years, people have seen it as a great store of value because it's not easy to get more of it, and it will stay in its form virtually forever. So if we look at backing something, I'm not entirely too sure. A bit like Libra, where they said we'll back it with a basket of currencies. It's all quite a difficult thing to actually peg that down and say, right, what is it we're going to back it with, and how does the fluctuation of that not affect the people that are using the underlying digital currency? So again, something that I think people will be pondering, but it's beyond my small brain's capacity to give the answers.
And on the topic, because you've both mentioned some components there, so I would like to ask, if we look at a future financial instrument, we've discussed the Petro and we've discussed some of the benefits that it has, but also maybe some of the things that may stand in the way of a country and a regional adoption point. What kind of components would you expect to see? And Gavin, we'll start with you when it comes to a future digital cash or a future store of value. What kind of digital components that maybe we have a few that come from Bitcoin and a few from alternative coins, but what's a huge requirement in your eyes?
I think first of all, I can't see any meaningful digital cash which is adopted to a point where we would deem it to be recognizable. I think it needs regulatory oversight and regulatory approval. I know in the world of cryptocurrencies and digital assets, the purists would say that contravenes everything about what a cryptocurrency is. But I think when you look at which types of industries are regulated, it's the important industries, it's the safety critical industries, it's the industries across the world which are absolutely fundamental to the way we operate and live as human beings and the economies that we thrive in, hopefully. The world of money is high up on that list, and therefore I don't see it ever being adopted in a way, or any type of digital solution where there isn't any regulatory oversight or at least quasi-approval in there. So I'm very much interested to see what CBDCs can do in that space. That doesn't mean to say I'm anti-Bitcoin or anti-digital assets in that sense, or cryptocurrencies. I still think they've got, they are the forerunners, and they will probably still exist even after a CBDC or multiple CBDCs come into existence. But I certainly see regulatory oversight as being a key component. I can see a DLT type a platform being of use. I would imagine, so if I think about here in the UK, we don't have a formal digital identification policy, but something like we have here in the UK something called a national insurance number, which is individual to every person in the country of working age. I could easily see some kind of ID type system running in parallel on this CBDC platform, where you're able to take all the advantages which come from something like Bitcoin, the ability to host money, the ability outside of the traditional banking system, the ability to move money rapidly and cheaply compared to our current system, the ability to move microscopic amounts of money, so microtransactions, which are still viable and can be done in a much higher volume, but at lower value per transaction. But I think the thing that's going to bite, and the thing that will be different, is the anonymity. I think either a fully anonymous system like Monero, or a pseudo-anonymous system like Bitcoin and similar. The reason CBDCs are trying to exist is to combat that anonymity threat. And obviously with that comes all the kind of implications around taxation and the shadow economy, and obviously we don't want to get too down on cryptocurrencies, but that's one of the things that states are concerned about. And I would imagine that the identification being part of any future CBDC, and the ability for the state to be able to see what's moving where and how, is probably something that will persist in any CBDC that happens to be successful.
Very interesting points there. And Richard, just quickly, because we are about to wrap up, but I would like to ask you the same question on what kind of core components you would expect to see moving forward.
Yeah. Well, if it's going to be something that's used by the citizens themselves, instantaneous is a direct requirement. I can instantly hand someone a £20 note or a $20 bill. I can't necessarily instantly hand them a digital asset. So that's going to be required. Electroneum obviously built one, and that is what made it take off. So that's my next part, which is you need to get some distribution. So if, for instance, they'd handed out to every single Venezuelan citizen $5 or $10 worth of that digital currency, I would suggest that it would be being used and would be a much, much larger success than it is now, because you kickstart the economy with that. So get some distribution in there. But lastly, just so I wrap it up for you, is interoperability is one of the things that's amazing about cryptocurrency, because you've got access to the globe. Again, Electroneum, we're all about empowering people by giving them access to the global economy. So if you build just a local digital platform, whether it's asset-backed or not, it doesn't necessarily gain you anything. And as we've seen with lots and lots of projects, you have to solve a problem for people to actually adopt it and to use it. So some sort of interoperability. If you've got a US digital currency and a yuan digital currency and a Bolivar digital currency, you've got all these things. Someone somewhere has to make those interact in some way, which also almost gets back to this sort of exchange, the exchanges that we've seen pop up in cryptocurrency. So you need to be able to move this stuff around the world, because if you don't, it's not anywhere near as useful as if the things that already exist in Bitcoin and things like that. And anonymity is another whole thing we'll cover another day, because I think we're running out of time. But anonymity is a really interesting one, simply because anonymity isn't always about criminality. Sometimes you live in a regime where anonymity is actually protecting you. There's an awful lot of women that are empowered by cryptocurrency because their husbands would take everything that they earn, and it gives them an ability to have an income stream that is outside of the male control in the household. So there's loads and loads of reasons for anonymity, as well as the darker ones. So thank you for your time. I'm sorry.
No, thank you. And it's such a shame that we have to wrap it up, because I'm sure we could continue talking for hours. But Gavin, Richard, thank you so much for your time today. It was a pleasure to hear your insights. So thank you for your time.
Thank you. Pleasure to see you.
Thanks. Well, I really enjoyed chatting to Gavin and Richard there and getting some more insights on government-introduced cryptocurrencies. We do want to hear your thoughts as well. So if you are watching us on our Swapcard platform, be sure to leave us some comments. We'll read those out later on in the session. And just a reminder that we do have 3 polls available for you all to participate in today, which will be asking you questions on where you see the industry of emerging technology, blockchain and cryptocurrencies. We'll also be reading out some of your announcements and thoughts later on in the sessions. Now, next panel discussion will be taking a look at cryptocurrency assets and understanding the equation of them across the Latin America regions. Let's take a look.
Getting the equation right. Understanding crypto assets across LATAM.
Good afternoon, everyone. Welcome to our AIBC Americas panel. And today we'll be talking about the increased interest in the Latin American region when it comes to crypto assets and the upsurge we've seen in the past few months in terms of, again, possible adoption in various countries like Argentina, Brazil, and Venezuela when it comes to the uptake of crypto assets. And during our discussion, we'll also be discussing as to why there is the sudden upsurge and potentially what the future might have in store in terms of the Latin American region. I'll start off by introducing myself. My name is Jonathan Gallia. I am the CEO of BCA Solutions, and I'm a lawyer by profession who's been involved in the cryptocurrency space since 2013. And the BCA Solutions offers various regulatory and technical advisory services in Malta, Singapore, and Liechtenstein. So we offer legal and regulatory services in those 3 jurisdictions. I will now pass on the floor to our panelists today. Start to go with Jesus, who will introduce himself, then Marco, and then we'll kick off our great discussion. Thank you.
Thank you, Jonathan. It's a pleasure to be here. My name is Jesus Rodriguez. I'm the co-founder, CEO, and CTO of Into the Block. We are a market intel and data science company for crypto assets. We mine a ton of data and try to provide indicators and signals that are relevant to investors and traders in the space. It started as just a few months ago in 2019, and today we count over 80 clients, including some of the brands that everyone recognizes in crypto, such as Binance, Bitstamp, Blockchain.com, Bitcoin.com, CoinMarketCap, CoinGecko, and a lot of other funds for which we build quant trading strategies based on indicators. My background is as a computer scientist. I've had a long career in tech as a distinguished engineer at Microsoft, building quant systems in Wall Street, a couple of successful exits as an entrepreneur, and became very active investor in both machine learning startups and crypto, and Into the Block is sort of the merger of the two, those two worlds for me.
Thank you. Marco?
Hi, everyone. I'm Marco Nigris. Right now, I'm in Lisbon, managing the FinTech House. That is basically a hub for FinTech startups, FinTech, RegTech, InsurTech, and cybersecurity. Obviously, the crypto vertical is there as well, and we're basically helping the startups to grow with different verticals. That is, it could be talent, investing, regulation, and connection to the incumbents. I'm Argentinian, and I was always in an amateur space in the cryptocurrency, but I've been following it since a very long time.
Fantastic. So I'm sure you'll be able to give us some very interesting insights. And in fact, incidentally, the first question I have for you relates to, again, what could potentially have led to an upsurge in interest in certain Latin American countries, like, for example, Argentina and Venezuela. And I would say that in recent months, there have been some, let's say, economic turmoil, especially, for example, in Venezuela. We have also seen the issuance of the petrodollar. And taking this, let's say, common denominator into consideration, do you think that, again, potentially some economic issues could lead to an increase in crypto adoption in such countries?
100%. I've been living in Argentina. I lived in Argentina for 20 years, and since I'm, I don't know, 10, I have my savings in another currency that sometimes was dollar, sometimes was euro, And then when I grew older, I started like buying assets. When I started being in touch with crypto, was a great way to have those assets in another form that would be, in this case, a digital or asset. So I think there are many things that combine to create this flourishing adoption of crypto. The first one is the inflation that we have in Venezuela and in Argentina. Also, not trusting the financial institutions to save our money, because we have seen that, for example, in Argentina in 2001, we lost a lot of savings for the ones that we were having our assets there in the bank. And then the third one is that we always look to invest in other stuff that and not having our savings in pesos, but with all the regulatory, the volatile laws like forex limitations in the quantity of how many dollars can you buy per month, or if you can buy or not for your condition. I think all those things bring a prosperous ecosystem for crypto adoption.
And just in fact, one additional question in relation to the last point you mentioned. In terms of the convertibility from pesos to another asset and vice versa, are there any particular issues in terms of, let's say, the common assets that are used to date, and is crypto a better solution in that regard as well?
For sure they were. Right now there is also a limit to buy through some platforms. So it can be difficult also to buy crypto via digital platforms. You can still find peer-to-peer, like buying
like
crypto.
local bitcoins, for example.
Yes. So that would be a good way of buying crypto assets.
Great, thank you. Jesus, what's your take on this one?
So I tend to agree. I think Latin America is sort of a perfect combination of cultural, socioeconomics, and also technological factors that could collide to sort of to foment the adoption of crypto. We have several of the biggest exchanges in Latin America, like RIP in Argentina, Mercado Bitcoin in Brazil, as clients, and we see the levels of inflows and outflows at the blockchain level that are increasing, as well as the usage in DeFi protocols. Part of it is obviously accelerated by the economic climate. Venezuela is seeing record inflations. I think worldwide is something we never seen. Argentina, unfortunately, there is a lot of uncertainty around the economic climate, and a new default on the debt. It didn't help. But also, I think the part of the adoption of crypto goes beyond the economic conditions, because if you think about it, there are other regions of the world that have similar economic conditions, and we don't see the same level of adoption. I think one of the things that made Latin America unique, particularly countries like Argentina and Brazil, are the technological talent. It's not a secret that Argentina in particular has been one of the champions and the most progressive countries in terms of the adoption of crypto technologies and the creation of crypto technology. We have a development center in Puerto Madero, and over years I built different engineering teams in Argentina, and the level of education is remarkable, and the technological community is impressive. And also, movements like DeFi act as an equalizer between for financial products between first world countries and developing nations, and that has been like that throughout the history of the world, and obviously DeFi is like a pillow fight, right? So in a very early stage, but if at least in principle, is very enticing for these economies to build products on top of those rails, because it removes a little bit of dependencies of, not trustworthy governments that have a track record of not being good stewards of the public financial system.
Yes, as you mentioned, quite an interesting point, which I'd like to pick up on as well. With regards to the understanding of the technology and its potential correlation with adoption, I mean, is it something that is, let's say, important for, let's say, an adoption of a particular cryptocurrency or a set of cryptocurrencies? So do you believe that a technical understanding of let's say, of how it works helps in the adoption of cryptocurrency?
So the point I was, obviously we can find, as the industry evolves, you can find users of all levels, right? Technologically savvy.
Exactly.
If we're only going to market to technologically savvy users, we don't have an industry, right? The point that I was trying to make is that countries like Argentina has been at the forefront of creating products and innovating in the space because of the technological culture that they have. The same with Brazil, and that has obviously facilitated the adoption within the community. As you're seeing more companies, more startups popping up, companies that understand the local culture, the local economic dynamics, are making it easier for consumers to adopt crypto in those specific regions. I mean, if you want a parallel, we're seeing the same with India these days, right? After regulation was lifted, and I think that's a good example to follow. I think Argentina has led the charge in terms of contributions to the crypto ecosystem in Latin America, and that obviously has facilitated the adoption.
Perfect. Thanks a lot for that, Jesus. And if you don't mind, in terms of the second question, I'd also like to start off with you, because you mentioned Brazil, and incidentally, there have been a set of regulations introduced recently in Brazil, which might affect exchanges there. And speaking of exchanges, I personally think that the Latin American country with, let's say, the most noise, let's say that, in terms of certain service providers like exchanges, seems to be Brazil. I mean, you mentioned even a couple of examples yourself. And is there any reason for this? Do you think there's anything about Brazil which, let's say, led to this, let's say, increase of service providers who, as you mentioned as well, are becoming quite big as well?
Yeah, I think culturally, if you follow the history of different technology trends, countries like Brazil have developed a culture for sort of developed products that are very localized. Like many of the open source projects, so you can go through history, the big data movement, the e-commerce movement, the cloud computing movement. They were products created by Brazilians for the Brazilian market, and because it's so huge and it's so unique that for a while you don't need to internationalize. And I think a lot of that is happening in crypto. Obviously, Brazil, if you follow the news, go through a massive series of scandals, from the Petrobras to the Odebrecht to the collapse of administration, Lula being put in prison, and a new government that is a very hardliner. So there is a lot of uncertainty around the economic climate and what's going to happen with the economy, and obviously crypto startups are capitalizing on that.
That makes sense, definitely. What about you, Marco? What's your take on this?
I would say, and I agree with Jesus, the market is huge, and also I would add on that investment normally in Brazil, it's less conservative than other countries. For example, you can see Argentina, that is very, like as Jesus said, tech savvy, and they want to, like, we want to, like, be innovative, but the capital is not there. In case of Brazil, I see that there is more investment going through the crypto scene in general. So I think that it's very important, and also with the development of different solutions in this industry, I think in comparison with Argentina, that is very centric. All it's very concentrated in Buenos Aires. In Brazil, you have different like nodes that are competing to see who is better. So that gives a certain competition locally to be better and to adopt more and to like, I don't know, be on the next level in each solution.
Do you think that there's the possibility of Bitcoin or any other crypto really potentially becoming a reserve currency in any particular LATAM jurisdiction? I know it's a big shot. I know it's that basically we're talking about the, let's say, the victory potentially of cryptocurrencies over well-known reserve currency like the US dollar. But again, do you think there's any possibility for that, be it in the near, mid, or long-term future?
Jesus, you want to start?
Well, I never lived in Latin America, even though I traveled the entire region. So I don't have the experience of being a citizen in those countries and dealing with the economic dynamics. But if I can draw a parallel from Europe and the US, the thesis of Bitcoin being a global reserve currency is still very early, and I think it has been put to test through with the recent economic downturn. Like if you the minute the whole thing with COVID started and the economic sort of semi-recession, you see all these theories of comparing, okay, Bitcoin with gold one day, Bitcoin with different stocks, and all those theories proven out to be not incorrect, but let's say not mature enough, right? The closest that I've seen in terms of research that sort of convinced me, and I think my session in Consensus, I presented this thesis, is a couple of researchers from the University of Berkeley, California, that they wrote a paper in which they call Bitcoin a high sentiment beta asset, which means high sentiment beta assets in capital markets are let's say stocks that are medium to small cap, that when the big cap, the large cap stock are up, they're up disproportionately to the large cap stock, and when they're down disproportionately to the large cap stock. And that has proven out to be correct. If you follow the trends of fan stocks compared to Bitcoin, you can see a certain level of over time correlation. So all these theories that if it's comparable to gold or silver or things like that, I think it's too early, and the market is too small. I mean, you're talking about a few $100 billion. I mean, it's like a pillow fight today. Now, having said that, the idea of having a currency that is more stable than what is provided by the monetary systems in those countries, that is fully digital, fully global, that has definitely store of value capabilities, and that has all these financial applications built on top of it, is as appealing of an option to Latin American countries as they have right now. Because other than that, obviously dollarization hasn't worked in many of those economies. Most of the currencies, the native currencies, have been incredibly unstable. So as the market grows, I think Latin America could be one of the biggest adopters and maybe push that agenda. Together with that, if you start seeing central banks adopting some sort of crypto assets in some form, whether it's a stable coin, whether it's some sort of I think that's probably going to be a push for Latin American governments, central banks to go after that type of innovation.
Very eloquently put, Jesus. And in fact, Marco also echoes what you mentioned earlier on in terms of, again, having had to, let's say, find an alternate currency or an alternative asset. And again, I would love to hear your take as well in terms of the potential adoption of crypto as a reserve currency in any Latin American country.
I find it difficult in the short mid-term because we're very proud of our currencies in general. We don't want to have, like the ones we have right now, we don't want to change it. We don't want to be dollarized. We see the dollar as a great asset to save. But if we go to, I don't know, any place and pay in dollars, it will be weird for us. And the same, like having a massive adoption of Bitcoin as a reserve. But what I can see is that maybe one of the Latin American countries will be leading the like crypto issued by the central bank, like be the pioneers in the world of adopting a digital currency, decentralized digital currency, as I don't know, other countries in the world that are trying to issue that kind of currency.
And in fact, just the last point, because we're out of time. You mentioned again the uptake of a decentralized digital currency. So I'm taking it that you're not, let's say, a believer of the petrodollar, which was, let's say, proposed in Venezuela.
No. In case, I mean, the petrodollar was to me was like a very good implementation of, I don't know, a political resource to show the society what the government was capable of, but I don't see the mass adoption in the country of that. I am saying that probably we can see a country, a Latin American country, issuing the first decentralized crypto asset in one of the countries and adopting it massively with the population.
Perfect. Well, gentlemen, it's been an absolute pleasure discussing with you. Thank you, Jesus. Thank you, Marco. I'm sure that, again, our audience had a lot of valuable information being passed on to them, and again, valuable insights coming in from the Latin American region. And that's a wrap from my end. Thank you once again, and thanks to the audience for following us as well. Thank you.
Well, a huge thank you to Jonathan there for his insights and moderating the panel on crypto assets. Now, as we did see on 2020, and the reason why we're here having an online conference, we did see a move online and more people took to the internet to educate themselves on emerging technology. Well, in this next discussion, I'm joined with Demal Zahares as we take a look into Cointelegraph as they dig into regional demographics country by country across the Americas.
In the know, Cointelegraph digs into regional demographics.
Well, Cointelegraph is one of the largest independent news portals based on individual user hits. So Demal Zahares joins me from Cointelegraph now. Demal, great to have you on the line today.
Jessica, thanks for having me.
Great to have you and great to catch up, and thank you so much for joining. Now, I do want to start off just by identifying some of the different regions across the Americas, and if Cointelegraph's demographics, if they've noticed any particular trends during 2020 that might have been surprising.
Definitely. Well, this was my first time actually looking into Cointelegraph's different areas in Central America. We have the Cointelegraph Español, which is in Spanish. We also have the Cointelegraph Portuguesa, which is in Portuguese. So we have that's covering Brazil and Portugal. And both of them basically have had about 5 million to 6 million views in total from each language since the beginning of 2020. So we've seen basically a general uptrend and then basically a spike in July. And since July, we've had basically the same uptrend, but just with a big spike in July. And both of those spikes were related to two different concepts. In the Cointelegraph Español, we actually had a big spike when there was an article published about the combination of cryptocurrencies and religion. And so that article was about the book of Revelation according to St. John, and basically how cryptocurrencies are basically in line with what the Bible talks about concerning money. So this was an article that went viral in Mexico. It had over 1 million views. And then on a completely separate topic, in Brazil, we had an article that had over 1 million views, and that was regarding the central bank's switch to instant payments in Brazil. So that was a completely separate topic. But that's basically July was our largest readership.
Wow, and very different topic there with Mexico with religion focus and Brazil when it comes to the economy. And I do want to touch on these demographics a little bit more, because having the kind of insight that Cointelegraph has is very interesting for different businesses and organizations to really kind of pinpoint the audience and where things are heading. So when it comes to, for example, Bitcoin transactions and wallet downloads, are you noticing, based on Cointelegraph's demographics, that actually there is an interest to learn a little bit more when it comes to actual cryptocurrency adoption and spending of digital assets?
I think that's correct. We do get a lot of articles written about how to use crypto for payments, how to use Bitcoin for payments. And of course, we get a lot of readership on our articles discussing companies that have recently integrated cryptocurrencies as payments, discussing how many people are using cryptocurrencies to pay for travel, to pay for transportation, to pay for things like dominoes in Venezuela. So we do get a lot of readership of those articles as well.
And when it comes to age demographic as well, because I think typically you would assume that it was younger generations that are definitely more inquisitive about the cryptocurrency market and the emerging tech sphere. But across the Americas, obviously, we do identify that there is a little bit more economic unrest, let's say. So maybe there's a wider age demographic compared to Europe and other counterparts. What was your take on this?
Oh, well, that's a great point too. In general, I think it's mostly males, 25 to 45 years old. But different articles get different readership. I mean, the article on religion was read by, a demographic that doesn't normally talk about cryptocurrencies. So it really is depending on each article, the user base that is interested in that topic.
And what's your take as well? Because Demelza, you've been in this industry for quite a while now. If we compare the audience retention and demographics and figures as well, compared to say late 2017 when there was a lot of momentum also from mainstream media, are the figures something similar? Is there a little bit more of a constant interest? What's your take?
Definitely. So our big English website gets 8 million views per month. So, the size of the English one compared to the Spanish and Portuguese is much higher. However, we do see an uptrend. I mean, it's just the curve on analytics, Google Analytics is just, trending upwards with little peaks here and there as articles come out that people find interesting. But in general, I think that South America and Central America are two target areas for Cointelegraph. They want to expand. They want to work with local media partners in those countries that are already covering cryptocurrencies and digital assets and blockchain enterprise. But in general, the numbers have been increasing for Cointelegraph over the years. 2017, of course, had a lot of viewership, but actually, now we've surpassed that, and COVID-19 actually increased our readership even further because people were staying at home.
And it came at a very interesting time as well, because we saw COVID-19 and we saw this move of people working online. We saw more content in the space. And then we also saw the Bitcoin halving as well around May. So there was definitely a surge of interest and momentum as well. So talk us through, first of all, your role as Director of Research in Cointelegraph. What is your day-to-day role within the organization?
Sure. So at Cointelegraph, I'm basically curating content and working on in-house reports. So for example, we'll have different reports coming out on mining, on macroeconomics, on security, and then we go through, we curate the content, we edit and proofread, and then we publish it to our readers so that they can have access to more in-depth reports if they're looking for a deeper understanding of a specific topic. And we also do research for other companies. So for example, a company may contact us the same way they would contact PricewaterhouseCoopers or Ernst & Young. They would contact us and our team because we are so involved in the space that we have a good grasp as well from the way that the market's moving and the main questions that people have when they get interested in this topic. So we're also doing kind of like this buy-side research or consulting for clients as well.
And we mentioned 2017 earlier on in the conversation. So based on your role in the work that you do at Cointelegraph, do you think that because there is more of a consultancy and a more of a research element in 2020, it does show a sign of maturity in the cryptocurrency and emerging tech sphere?
Oh, I completely agree. I think if you look at, I mean, that's actually why Cointelegraph made this department, because if you look at the way the market's moving, we have PricewaterhouseCoopers entering, Deloitte entering, Ernst & Young entering. Then we have IBM doing lots of projects with Hyperledger and Fabric and that whole family of products. We have a lot of the big names are moving into the space. And then in addition, we have reports coming out on digital assets from Bloomberg, from Fidelity. Then we have new boutique research entities that are actually producing great quality research. And the industry is maturing so quickly because there's actually an audience for these reports. There's an audience of people that are traditionally from the financial sector. They are used to research reports, and they now want to understand this new asset class within the old glasses, within the old framework that they're used to. So I do think that the market's maturing, and a lot of firms are starting to position themselves as research centers so that they can associate their brand with education instead of with hype, and I think that is a sign of maturity of the entire ecosystem.
And what kind of sectors are of interest at the moment? What kind of areas are you really looking into? Is it more digital assets, or is it more organizations individually?
Well, that's a great point. We have, on the one side, blockchain enterprise. So you have a lot of companies that are still trying to understand if they can use blockchain like for internal processes, to enhance internal processes or to enhance interorganizational processes. So that's a huge area. But now on the other side, we have this huge growing class of investors that are interested in the space for investment opportunities. And in that space, they're looking at all sorts of topics like, how is this correlated with traditional assets? Does it offer diversification benefits? What kind of tax issues will I have, if I invest? What are the liquidity? If I invest, can I actually close my positions? How much money does it take to move the market? So you have a lot of questions coming now from traditional investors that want to understand how they can invest and who they should invest with. What are the custodians involved? Who are the banks involved, et cetera? And what are the regulations in place to protect them in case of bankruptcy? I really feel the whole space is maturing so quickly.
That's fantastic to hear. And now finally, just to summarize, Demelza, I know during this conversation you mentioned that the Mexico article on religion and cryptocurrency had 1 million hits. To me, that was a very surprising statistic. But when you looked into Cointelegraph's demographics and analysis, was there anything that surprised you?
Ooh, I mean, to be honest, the religion article was very surprising. Funny enough, another article that was a really big hit when I was looking at this was from the Middle East. Our biggest hit was is Bitcoin halal, or is Bitcoin halal? Just trying to understand how cryptocurrencies work with religion and with religious needs, and I think that a lot of people that aren't traditionally in the space, these topics are really interesting for them because it's something that they can relate to, and then they can move into learning more about digital assets. It's not just this huge complicated topic, but it's something like, okay, I've read the book in Revelation in the Bible, or I've heard of St. John, and I remember those, or I'm interested in his quotes. How does this relate to digital assets? So in terms of just surprising. It was really surprising for me to see that article in Mexico. So I think it's really cool that people are curious about digital assets in Central America and South America. And I hope that people read more Mises and less Marx going forward.
Fantastic. Well, thank you so much for coming on the line and sharing some of your insights as well. It's always a pleasure to catch up, and I'm sure our viewers have definitely learned a lot during the session. Thanks for your time today.
Thank you, Jessica.
Thank you. Well, a huge thank you to Jamelza for her insights there. We hope you found that session very interesting, as did I. And a huge thank you to our sponsors, ZBX and Chili's. Now stay with us after a very short break for our next set of sessions.
I'm very excited. We have a very important announcement to make. SiGMA is heading to Africa. That's right, a fourth summit that will complement SiGMA Europe, SiGMA Asia, as well as SiGMA Latam.
We have a strong workforce in Malta, Kiev, Sao Paulo, and in Manila. So it's time for SiGMA to expand beyond our comfort zone.
SiGMA Afrique se déroulera en 2022, regroupant sous un même toit toute l'industrie émergente du iGaming et des nouvelles technologies.
We were then faced with the question, where? We understood that gaming in Africa is dominated by 3 regions, East, West and South.
Nous avons décidé non pas d'organiser le salon à un seul et unique endroit, mais dans 3 majeurs pays et piliers du iGaming en Afrique.
En effet, SiGMA alternera chaque année, en commençant par la vibrante capitale Cape Town, en Afrique du Sud pour l'inauguration.
The following year, SiGMA Africa is flying west to Ghana, and in 2024, east to Kenya.
We're looking forward to working with you in Africa. We're 2 years away from our inaugural summit in Africa, so time is on our side.
Si vous avez de l'expérience, les connaissances et le réseau, n'hésitez pas à nous contacter.
Here at SiGMA, we firmly believe that our 4 summits, SiGMA Europe, Latam, Asia, and now also Africa, will pave the way for the gaming community to learn from and do even much more business with each other.
Rejoignez SiGMA, le Festival mondial du iGaming.
Well, we're back on AIBC America's Digital Conference, and a huge thank you to our next sponsor, CoinCasa, for the sponsors of the next topics. Now, the next topic at hand is a trending one at the moment, which is neobanks and challenger banks. And now we're asking you the question, are they here to stay? And will they soon become a sector in which the business banking industry is surging? We're seeing surging banks like Revolut and Monzo big in Europe, but how does the landscape look across the Americas? Well, let's find out with our next set of panel discussions.
(2020) Vision, Neobanking and FinTech Developments.
So we're taking a look at neobanking and fintech developments in 2020, and joining me now we have Josh, Alex and Daniel joining me on the line to share their insights. So great to have you all joined, first of all, really appreciate it. And Josh, I'd like to start with you because it's been another huge year for Binance, and I would love just to get a run through of some of the biggest milestones and developments from your side.
Yeah, absolutely. No, great to be here, Jessica. Thanks for having us. So I think for us, I mean, this year's been really focusing on executing our vision to build this digital asset ecosystem that we've been working on for a while now. And so we really see Binance now as kind of a pretty comprehensive digital asset ecosystem that offers various component parts within the crypto asset space. So one of the key focuses, and I think we all know this, right? DeFi, extremely in fashion right now. There's so much noise and chatter in the markets about it, but we've been kind of keeping our heads down as much as we can, trying to build out our
our own kind of angle from the DeFi perspective. So what we've seen recently is we've seen Binance Smart Chain really go from testnet to mainnet. So we've got this out there in the market. People are playing with it. The design is cross-chain interoperability from day one. We're also smart contract functionality compatible, which is great. So we've seen people start using this thing as a bit of a toolkit, a fundamental, I guess, a base for people to build things on top of. So that's been really fascinating to see people start building on top of this thing. And in the background as well, on the wider DeFi note, we've actually been continuing to list a lot of assets. So there was a lot of chatter from the community earlier this year about, hey, Binance, when are you going to start listing more and more assets? This is what you guys do. And I think we've been quite quiet on that front, but we decided to, support the DeFi economy as much as we possibly can. And part of that obviously comes with listing as many of the kind of assets that are out there as possible to support and foster the growth of that industry. So we focused massively on DeFi over the last couple of months, whilst obviously this kind of COVID strangeness has been happening in the background. So we're quite well placed right now to keep building on that front. We've also been focusing on derivatives. So we launched our derivatives business at the end of last year. We've seen it kind of go from all-time high to all-time high. We've got a pretty comprehensive suite of instruments out there right now, from perpetual swaps, quarterlies, options contracts, and the feedback's been really, really good so far. We've got increasing amounts of kind of retail interest as well as institutional interest. So that kind of validates what we were thinking, that derivatives are a key part in bringing quite a comprehensive and mature ecosystem to market participants. So we're going to continue focusing on that. And actually one of the core areas of I guess, difference between us and other providers is we provide altcoin derivative products. So for example, we've got all these altcoin perpetual swap contracts out there that a lot of other providers don't. So we're going to keep banging that drum because we think it's really important to to keep building and diversifying the amount of derivative products that are out there. And then on top of that, we've got lots of other things under the hood that we've revealed recently, like our Binance Card. So bridging the traditional banking ecosystem, the fiat ecosystem, let's call it, with the crypto ecosystem. So we've built a crypto native debit card. So not a prepaid card, a debit card, letting you spend your crypto as you go. And that's been a real eye-opener for us, getting that into the hands of some select users that have been testing it in Europe for us over the last month or so. So lots of things under the hood. We've been carrying on building, despite all of the headwinds we've had in the economy and in the wider kind of COVID sense, carried on building, carried on kind of getting products out to market. And, it's just the halfway point of the year. We've got a lot more planned.
Never a dull moment. And Alex, I'd love to turn to you now, because blockchain at UCLA really is a startup incubator system. So when it comes to financial distribution through your network, I'd love to hear, what you've been seeing so far in 2020.
Yeah, so thanks, Jessica, for having us. A pleasure to be here. We've been working on this ecosystem since 2017, when we started the UCLA group. Very early on, especially given our perspective as a university, we saw that this needed to be a regulated environment in order to catch all the potential that it actually has. So most of our research and focus has been on regulated digital assets, what we call, and everybody knows, as security tokens. We've been doing a lot of work on it. We wrote a book on it, so if anyone is interested, it's called The STO Financial Revolution. It's available on Amazon. It's just $1 and all the money goes to UCLA. It gives a perspective on the space of regulated digital assets across the globe and in the US. So we've been seeing different things, like out of UCLA, we have a few companies that came out. They'll send a shout out to my friend Alex Tan from NODT. They do chain analysis. We've worked with different companies like Panasonic, Lamborghini. A series of different blockchains and ecosystems had tapped into, and it's quite interesting because it's a growing trend as blockchain as a new frontier technology. Not only at blockchain at UCLA, but we have blockchain at Berkeley, which is a massive group. And we've been seeing a lot of institutional adoption. To Josh's point, now digital assets, the OCC here in the US just announced a couple of weeks ago, maybe 10 days ago, that retail banks are now going to do custody of crypto assets. And that's huge for the market because we're going to see more and more adoption with products like the Binance debit card and other more retail, easy to manage and easy to use products. So that's a lot of what we are looking at. DAX tokens, DAX token offerings is another one that we are looking a lot into. So banks, institutional players, and how they relate to digital assets is our focus.
Fantastic. And now, Daniel, I'd like to turn to you because you're representing a company that's global banking on the blockchain. So when we look at these two worlds, the blockchain sphere and then also the traditional banking system, I'd actually like to get your insights on how you see them work in tandem.
Yeah, I mean, Turnio is focused on providing interoperability between what we think of as the crypto universe and the traditional banking and fintech systems. They're very complicated. There's a lot of intermediaries, and what ends up happening is consumers end up paying a lot of costs in between because of all those people, in the middle. And it's because there's complicated systems that have to do a lot of things, everything from compliance and regulatory type stuff, which, by the way, you can't be in this space if you don't have something that allows for compliance and governance. Now, a consumer might be able to have digital cash at some point in the future, and Walmart might accept that digital cash, but you can't be a fintech company. You can't be Binance, you can't be Turnio, unless you're going to be fully compliant, because you'll get taken down very, very quickly. And so what I think of is, when people think of cryptocurrency, they always think of it as the dark web, the Bitcoin people with the money laundering. And while of course that does happen, I'm here to tell you, we have like bank accounts that are seamlessly interoperable between cryptocurrency. You can buy crypto, get out of crypto, you have your own bank account. Ultimately, I think what we're talking about is just digital cash on the blockchain. If you want to have Bitcoin as a digital commodity, great. If you want to have some kind of other digital asset that is, more frictionlessly convertible as opposed to a stock, great. But, I think most like interaction and usage of blockchain in the future is just going to be digital cash. And so we're providing that interoperability between that blockchain or those sets of blockchains and what we consider today, Visa, MasterCard, the banks, etc.
And Josh, you were nodding along there, so I'd like to ask, your opinion if you agree. And then in that case, what are some of the biggest challenges for neobanks and industry fintechs at the moment?
So what I was saying was, I think a key theme we're seeing is usability and accessibility. Making this as accessible to as many people as possible, I think, is one of the key things that we're seeing as a real kind of, a enabler for the blockchain economy. If you can make user journeys, services easy to use, accessible and cheap, or cheaper than things they're doing in the traditional sector, suddenly people see the real value in this. One of the areas we as Binance have been looking at for a long time is kind of conducting different temperature tests in different regions about what people like, what they don't like, what they expect to see, and really, if you can make everything user first, if you can drill down to the core basics of what a service is and how it should work, suddenly people start using it. And I know that sounds so easy, but a lot of blockchain or crypto companies, us included sometimes, we get it wrong. We make it too complicated, and it's difficult for the users to kind of get up to speed and get using with this thing. So that's one of the core areas I think that all of us seem to be focused on now, making it easy for people to pick up and start using. But to your question about neobanks, I think neobanks have got large hurdles to jump over, but they are absolutely critical in kind of driving forward the fintech economy, because what we've seen over the last couple of years in the crypto space is a real hesitation from the traditional banking ecosystem to support digital assets, cryptocurrencies. They have been very reticent to open up banking channels, to open up core functionality like, for example, lending facilities. And that simply is because their risk tolerance and risk appetite is much lower. Whereas neobanks have got a slightly different risk appetite. They think outside of the box. They're problem solving banking as a sector as opposed to sitting in their position right now as an established banking provider, making decent amounts of money, not having to change it and disrupt their own sector. Whereas the neobanks are coming in going, we've got to do this bigger and better, and it has to be, more widely accessible to consumers. It has to be cheaper. But the problem with that is, how do they make money? So we recently have seen in the last few months, the financials come out from Monzo, from Revolut, from Starling Bank, and there's massive amounts of progress there. You can see that in terms of user numbers going up, transactions going up, deposit amounts being held per customer going up indeed, but profitability is still the core challenge there. And I think that's really because neobanking and the liberalization of the digital banking economy has led to massive amounts of competition. And with that competition means it's even more difficult to make money, right? But what I will say, and I'd be at fault for not banging the drum here, is where you see these neobanks adopting Bitcoin or being crypto compatible, they have an edge against others. So if you look at Revolut's earnings from their crypto space, as well as other neobanking providers like WireX, is a massive engagement tool for new users. So I think neobanking is absolutely going to be going from strength to strength. It's going to be a challenge, but the wise ones like Turnio will be absolutely kind of picking up the Bitcoin baton and running with it at full pace.
And Alex, I'd like to get you.
That's a very good point. And Josh brings a really interesting point, which is the competitive advantage that digital banks have over retail banks. We're working with one digital bank in Latin America, and that was the point I was trying to piggyback here on Josh's comments. Is if you get a digital bank who has a much lower cost of operation than a retail bank, and you plug it into an environment where people are not bankable in a large majority, Southeast Asia, Latin America, Brazil, you combine those two things, right? So if you look up online, there's already case studies that are happening in Latin America, these digital banks utilizing crypto or crypto-friendly products. We're working very closely with one of them that's issuing a stable coin. And you're massively giving people that previously had no access to banking services, full banking services on their phone. So you're going to see a massive adoption of these digital banks, especially with new regulations that allow digital banks to launch and have all the licenses and compliances like Daniel mentioned. I think we're going to see a massive adoption of that and a whole new disruption, especially in places like Brazil, where you have incumbent 4 or 5 banking companies.
And Daniel, if you look at the different elements of different neobanks, but also fintech organizations in the industry at the moment, what kind of organizations or even elements of organizations do you really think are the most poised for success?
There's a few. It's funny. I was thinking about what Josh and Alex were saying, and I'll say that if you think about, we use this term neobank, and all it is really is a bank that has that's chartered in some country, right? So it's got legal ability to be considered a bank now, and it doesn't have a bricks and mortar operation. That's it. USAA has been doing that for 30 years, minus they have one location. That's not new, and they're not using necessarily new technology, by the way. And I'm not particularly impressed by there's a couple of them that I'm super impressed by, but in terms of like, you grow 20 million customers, but you're still losing, $500 million a year. I mean, that's insane to me. I don't understand it. And the idea that somehow like we'll get there, it's the same story we see over and over again with WeWork, and you see it over and over again. We'll get to profitability. No, you really should be at profitability today. The story of not being able to have profitability should have been your first million maybe, and then you scale and you actually start to provide profitability. So who's doing it right? I think there are a few that are really doing an amazing job. One bank that's very forward-thinking, I think, that is sort of under the surface you never hear about, is Cross River. Certainly, I think Starling is doing a lot of amazing stuff out of London. I do think that Nubank out of Brazil, right? They're doing a good job. But there's most of them, honestly, I'm not necessarily particularly impressed by. Like Revolut's got a lot of money, and they're doing. I mean, They're clearly growing quickly, but I'm not impressed anytime somebody can raise capital, $200 million, $500 million, and then lose a bunch more money. Like, I'm super not impressed by that. So I think there's a handful, and I think that also one person I talked to, I won't say which company, but it's one of the largest fintech companies in the world, and they were talking about how, like, what we're doing, Binance, what we're doing here, what Alex is working in some form or fashion in terms of working with technology, blockchain. We're already 2 generations ahead technology-wise than, like, the quote-unquote, neobank. And so, while some of them are kind of, playing around, Cash App and Venmo and Revolut are kind of playing around with cryptocurrency, Robinhood, they're not really actually making it interoperable where people have day-to-day utility, right? Where you can spend Bitcoin, right? And I think that's what we do. So I think that's going to be, the story has yet to be told as to who the next Amazon of this industry is going to be.
And you listed some companies there, and you've also listed the region. And I want to turn to you now, Josh, because you're the Director of Growth, but for the UK, but also different regions in Latin America. So is the necessities different region by region basis when it does come to these fintech neobank organizations, when it comes to requirements for the clients and consumers?
Yeah, absolutely. I mean, we realized as a company, we're a global company, but as cheesy as it sounds, we have to start thinking locally, right? And that's something that we've been focusing on this year, really taking a local approach to the way that we build our products and services. So if you look at the challenges that our consumers and customers, whether they're consumers on the retail end or whether they're corporate or institutional users, if you look at the challenges they face in Latin America, they're extremely different to the challenges that our retail base would face in Europe, for example. So we as a company have started thinking at a regional level and increasingly at a local level, actually, in being able to provide people what they need to do whatever it might be. It might be holding a store of value in Bitcoin, understanding, an easy to read at a glance dashboard of what their, net gains, net losses are on their assets. Others want to find a way of, for example, remitting currencies across regions, because it's cheaper to send a stable coin than it is to use their local banking provider. So we've really had to drill into what the use cases are for all these different regions. And Latin America for us is a really interesting one, because the use cases are so powerful at all elements of society. So, we've been looking in Brazil, we've been looking in Mexico, and there are large amounts of cross-border remittances happening there. And if you look at the average cost of those remittances, they're verging on criminal. I mean, it's just outrageous how much people pay in fees. And there's no excuse for that. And to go to Daniel's point, that's purely because there are layers upon layers of intermediaries, all taking either spreads or a fee on each transaction. Well, with blockchain, you can reduce the layers of intermediaries and really make it much less heavy in terms of intermediaries or friction, and that makes a material difference to people's pockets, because suddenly they can send something and it costs less than $1 versus $10. And if people are doing that every single day, every single week, it's a material difference to people's lives. So what we're trying to do is look at things regionally, work out what we can build on top of the core fundamental toolkit that we can offer people, and find ways to bring that value to them locally. We've got a long way to go in providing what I call a truly localized service, but we're absolutely kind of committed to that, and we think that's going to be an increasingly important part of our business, offering these local services on top of this kind of global toolkit that we provide people.
And if we look at, yes, please go ahead.
No, go ahead.
So I was going to ask, if we look at the Americas as an example there, and Josh, you have highlighted some of the issues, remittances being extremely high, and when it comes to intermediaries taking a cut each time. Cryptocurrency cards, and I'd like to ask all three of you this. If we look at Brazil, Venezuela as examples, cryptocurrency cards, and also organizations like Visa and MasterCard taking a percentage cut, is that something that makes sense when we look at the future of finance here? And Alex, we can start with you.
Yeah, and that's a very good question, because with the point I was going to reflect on Josh's comments. you have a lot more opportunity in these markets like Southeast Asia, China, or Brazil than you have in, for example, Europe or the US, right? We bank here with JP Morgan Chase. Why would I leave JP Morgan Chase to go to a neobank or to go to, let's say, Binance will one day become a bank or a global bank? Doesn't really add much. I have all the same services. It serves me well. But if I am someone sitting in Brazil or sitting in Venezuela and I'm getting money for my family members that are abroad, sending me cash to help me out, that makes a huge difference. $10, right? $10 for someone in the U.S. or in the U.K. is a beer. $10 for someone in Brazil or Venezuela is almost like a week of their budget. So I think that in those markets is where you're really going to see a major adoption. And if you pair that with like a cell phone being this kind of demographic first computer, then you're poised to a massive growth in these markets. And that's what we're seeing from the clients on those regions that work with us.
And Daniel, I'd like to get your point on this as well.
You know, I think first people need to remember there's many different types of blockchains, okay? And so I just paid $6 for an ETH transaction like 2 weeks ago. I just read on somebody's Twitter yesterday, and she was like, I had a $15 transaction. She was sending $15 and $12 gas fee for the $15 transaction. Now, that's Ethereum. That was Ethereum. It's not going to be sustainable for certain kinds of blockchains. Ethereum is great with smart contracts. It's fantastic. Bitcoin is a great store of value. It's fantastic. They're not efficient or well suited for payments. And the idea that somehow Visa and MasterCard and others are those particular organizations are problem, I think is wrong. I think they're the solution. Visa and MasterCard are going to be symbiotic in my asymmetrical warfare against Western Union and the large banks that are just ripping people off. And I'll tell you that when people started, this, if you think about how much animosity there was against banks, I mean, Bitcoin started as a visceral, FU to the banks, right? to the system. And I'd say that we traded one devil that we knew for a new devil, and the new devil was these centralized exchanges. And I think what we'll get to is we need to have, depending on the use case, some blockchains are well suited for payments. I think you'll ultimately have, from a technology perspective, sorry, there's a fly that seems to be interested in me. So you'll need to have a proof of stake type of blockchain that'll be used for payments. It's not going to be that all blockchains are going to solve all problems. And I do think that eventually what will happen is the banking system will just simply become the money that we deal with will be built on top of blockchain. So the average customer, the average person is going to be interoperating with cryptocurrency, and they won't even know it because the world's largest cryptocurrency, most actively traded cryptocurrency, is in fact the digital dollar. And so I think that's where we're ultimately headed. And because of that, I think that'll ultimately lead for more people to be able to have access to custody their own assets and control their money in a way that they never couldn't in the past. And I think that's ultimately what's going to be different. People will have more control and they can self-custody in a way that they never could before.
So there's some way to go, but certainly a paradigm shift is underway. Well, all of you, thank you so much for your insights today. It was great to get some context and hear your perspectives. I'm sure our viewers certainly learned a lot as well. So thank you all so much for your time today. Some really great insights there from Josh, Alex and Daniel. It was a pleasure to catch up with all three of them and hear some of their insights, and I hope you learned something along the way also. Now, a lot of blockchain and emerging tech conferences, the phrase bringing banking to the unbanked is commonly used and commonly brought up. Well, across the Americas, it's a $34 billion industry, targeting people that don't actually have bank accounts and bringing them into the financial world. Now, we do have a poll for you all to participate in, asking you, is Bitcoin the answer for financial inclusion? We'd love to hear your answers and hear your feedback on Swapcard.
Minha pergunta para vocês: Bitcoin é a resposta para uma inclusão financeira?
Now, our next panel discussion hosts someone very special to the blockchain and cryptocurrency space. You might recognize him as one of the most popular YouTubers in the blockchain and cryptocurrency sphere, entering the industry in 2017. So see if you can spot him, and be sure to reach out to him on Twitter if you see him in the next panel discussion.
Muito obrigado, CoinCastle, por nos patrocinar.
Finding financial freedom, a $34 billion industry.
Hi everyone, hi Nicolas, Ernesto, Juan David. Very good to have the three of you here today.
Thank you, Beatrice.
Thank
you, Beatrice. It's a pleasure.
Thank you for making the panel. To start with, maybe with Nicolas. I mean, of course, the lack of financial inclusion is definitely being a serious handicap for the 1.7 billion people out there who are unbanked and or underbanked. But it's also as well serious missed opportunities as well for financial institutions who are definitely, losing a lot of opportunities and so on. But still, we have seen a couple of them who have started to take some initiatives in terms of adapting to the blockchain technology. Could you highlight maybe what are the traditional, let's say, financial institutions doing in that respect?
Yeah, exactly. Just well, thank you for having me. And I think to this question, I wish I had more of an optimistic answer to this kind of initiative of larger banks or commercial financial institutions taking a step into Latin America. The problem that I've seen so far is that when I'm visiting here currently in Europe right now, and I've also kind of gotten a feeling from U.S. banks as well, that you're not seeing a major push. You are seeing some companies experimenting with distributed ledger technology and trying to build kind of new payment networks, maybe working with kind of some of the more kind of institutional grade projects in crypto. But the real key issue here that a lot of these companies run into, it's not that they per se don't want to reach these markets. There's obviously a great market to lend to. These are high growth economies. And in a lot of cases, you can actually, if you basically know the right market to lend to, you can actually charge relatively low interest rates and have pretty good pay through. The problem is that you have two issues. The biggest one here is that a lot of these companies don't know how to identify KYC and do credit checks for the end users they're trying to lend to in these regions. And along with that as well, it's a lot of regulatory red tape. Stepping into these regions, you're curious about whether or not as a financial institution, like a big bank, for example, like here in, where I'm at and stuff in Europe, you have big banks like Commerce Bank, or you also have banks back in the United States like Bank of America. When they make a step into these markets, they have to worry about the regulatory environment. And, usually it tends to be that there's a cost associated with each account that a bank has. In this case, sometimes it's not financially feasible for them to make that move just yet. So what I think you're going to see really at the end of the day, is a lot of startups, and we're seeing all kinds of different startups across the board experimenting with building crypto applications or wallets that allow you to tap into decentralized networks like Ethereum. I know Ernesto can probably speak to that a little bit working from the Dash community, but I think there's just such a fascinating realm of different companies that are starting to do this, and you're going to see it come from the startup world more than anything. So again, lots of solutions coming to the DeFi space, but we're going to have to, again, I think, find a way to do credit measurements and also proper KYC for a lot of these regions where it's a lot more difficult than maybe some of the developed regions of the world like the United States or Europe.
Mm-hmm. And then Ernesto, actually, you are located in Venezuela. Have you seen traditional financial institutions taking some kind of initiatives as well with adapting with the blockchain technology or DLTs in general?
Yeah, so thank you for the question, and I could not agree more with Nicolas. Although I'm now in Venezuela, I live in Mexico where I'm based, and what I see is that Mexico is a very modern looking country in terms of fintech. So there's, just like Nicolas said, lots of startups working on how to solve getting into these segments of the market. It is spot on to say that what happens is there's only the top part of the economic segment of the population that is banked. All these people, when you go to Mexico to a tianguis, or when you're in Venezuela in a small mercado, many of them do not have bank accounts. And it's not because they don't want, it is because they're not profitable for banks. So it is now up for many startups to work their way into how to get to these people. Like most of them do not have banks accounts, or they don't have cards, but they have phones. So now with blockchain technology, starting with crypto payments, they have the ability to send and receive value in terms of their phones. So that is step one. What I'm seeing as step two is that many of these companies are starting to work on with blockchain technology in order to record some of the initiatives or some of the actions that are happening in these markets. So let's say we four are part of a group that were, on a small town outside of Guadalajara in Mexico, and we ask for a credit. Whenever I pay, that can be recorded on the blockchain, and then financial institutions can see that, oh, Ernesto paid back his loan. So that can reduce cost and can provide access through blockchain technology. We're on very early stages, but what we are seeing is that many of these companies are disaggregating the processes and making them efficient so they can work on them, which is something that the larger institutions, because of their size and because the way they are established right now, cannot do cost-wise. And also because the segment is a low budget segment, many are not entitled because there's not a lot of profit there. So there is a big chance to, implement many of these tools, and we can talk about how we think on the next question.
Okay.
Yeah.
Juan David, maybe would you like to highlight the key advantages and benefits of blockchain and digital ledger technologies for financial inclusion?
Yeah, absolutely. I mean, when it comes down to also looking at it from a different aspect, I work in the side that is more the heavy infrastructure for the B2B in the industry. So we work in everything that is algorithmic trading and financial infrastructure. So when you look at it as well from how do we make large financial institutions to engage into the ecosystem, it comes down to really having very strong infrastructure. So everything that you're talking about, having a correct way of measuring risk in a scalable way, it all comes down to actually, do we have the infrastructure to be able to do it? And the reality is that a lot of these financial institutions and a lot of these banks, they don't have a real incentive to take the risk if they don't have to. So, but that doesn't mean that they don't want to go there. That just means that they might go there with a different approach. The different approach might be, for example, doing heavy investments in the startups that are building those technologies and being ready to acquire those companies later on. So when it comes down to how is this going to change the landscape, especially in countries like in South America and Southeast Asia and so on, what we see is that you have both very large startups that are heavily investing in these industries, but they are a lot of times backed by large financial institutions as well that are ready to put the money and potentially acquire them later on once they manage to provide value to the masses. But in the meantime, effectively because of the cost that it takes to onboard a large amount of people, why would a financial institution take that risk when they know that they can actually take another way just through a more venture approach to the industry, which so far it is working, because a lot of these banks, even you were mentioning Commerzbank, they as well invest in different companies that are creating a lot more B2C driven products.
Yeah. Juan David, would you have a concrete example or case studies about a project or a company that is using blockchain technologies or DLT, which has shown being very successful for financial inclusion?
Yeah, I mean, I think when it comes down to majority of these projects, we need to still realize that the heavy users of the technologies are going to be early adopters. Like even when you think about, I'm originally from Colombia. When you think about majority of these, for example, lending systems, I think they open a tremendous amount of power to people in developing economies that don't have access to the capacity for lending structures that you do in the first world. Now, that being said, still today we're at a point where to be able to use and take advantage of these, you need to be quite a sophisticated user. So even people that I know that are taking advantage of these in countries like Colombia or any other South American country are still today not majority of the people that you really want to target as let's say creating social inclusion, are going to be just people that realize that they have a need and they have somehow maybe a small advantage in their own country because they have slightly better education and they take advantage of it. So the reality is that for example, everything related to automated lending is a super interesting case because in South America, for example, banks really locking the society to use the banking system as is. Like people don't even have the capacity to own and have bank accounts denominated in dollars, which of course restricts their capacity to manage wealth and ultimately the capacity to preserve wealth, which is a gigantic problem because if you want to get a mortgage and you have to pay a 15% per year on your mortgage compared to what I pay in Europe at 1%, of course I have a competitive advantage to build my wealth long term over everybody that is there. Now they can actually use cryptocurrencies to use stable currencies to have value in dollars or Bitcoin. And then on top of that, they can use that to stake and lend capital to maybe get a mortgage. And it's something that does exist, and the example is there. But what is not there, yes, is the mass use, because the early adopter is actually the educated person in the developing world.
Mm-hmm. Mm. And Ernesto, do you think there are some key challenges with the blockchain infrastructure that could be a blocker to its potential for financial inclusion?
Yeah, definitely. Like we're talking, financial inclusion is still work in progress. There is the possibility there. I see it here in Venezuela, in Mexico, in Argentina. People in these economies that have troubles, they need something else. They don't want to stay with the local currency. Just to give you an example, I arrived here for work in March, and $1 was 70,000 bolivars. Today, $1 is 340,000 bolivars. So that pushes people to look for something else. So on the other side, there is crypto. There are stable coins. There are coins that fluctuate in price with Dash and Bitcoin, but it is still not very easy. So what needs to happen is easy solutions. Regulators also need to do their part and not make it, impossible for startups to develop solutions. And education and awareness need to happen. So if you tell me these three things in that order, making it easy, making sure that it can be compliant with laws and we can keep bad actors outside, and then educate and tell people about it, are the three stages that I believe need to happen.
Okay. And Nicola, in the technology itself of blockchain, the way it's all set up, do you see any kind of blocker to its potential?
Yeah, I think for blockchain, one of the biggest issues right now, and I know this probably isn't an issue on maybe the Dash network or some of the crypto networks who have really focused on either keeping transaction fees low or practically non-existent. On networks like Ethereum right now, we're seeing decentralized finance take off. And there's not only two problems that I see in it, it's not just an issue of the gas fees right now, which are not practical for anyone in Latin America, whether you're in Brazil or in Argentina, to places as well like Venezuela that are in financial turmoil. There is no reasonable way they can utilize any of these decentralized financial applications. They can't even probably justify sending an Ether transaction over the network, which is still going to cost you $3 to $5 at any given time. But the problem that I see as well is that with decentralized finance, I'd say the vast majority of it is kind of focused on building services for a bubble within the cryptocurrency space. There are applications over collateralized that don't really service people who need to get microfinancing in these regions. And a lot of it also as well is not tapping into real world markets. So even if you built something that was practical for someone in Latin America, it's still not really, dealing with, assets outside of, just digital assets like Bitcoin or Ethereum. So I would really love to see DeFi, and I think we're starting to see it starting to materialize, and we'll see it over the next year or so, where we start to focus on under-collateralized loans. We start to focus on bringing in assets and other participants in the market that have not been involved yet. I think it's our own ignorance of thinking that what we're focusing on right now as being the golden goose of decentralized finance. The real multi-trillion-dollar kind of part of the equation that I think we still haven't tapped into is actually reaching people who need this the most. And it's going to be billions of people who have never had this level of financial experience. Because if you can, for example, like right now, we built a crypto smart wallet that you can use on an iPhone or an Android phone. And it basically acts like a digital bank account that anyone can get access to, plugging into decentralized financial services. So being able to give someone a stable coin, being able to give them, the ability to transfer or send and receive funds like a remittance application, I think that's going to be huge.
Mm-hmm. And Juan David, I mean, one important topic as well would be the cultural adoption as well. Are there any specific initiatives that you would like to see or that exist already as to create more awareness and education about blockchain, what it can bring and its potential for financial inclusion?
I think when it comes down to that, the interesting part of it is that, and of course everybody will have their own opinion on it, but the way that I see it is that we don't need to be educating people. The concept of blockchain at the end of the day is something that we talk about because it helps us to understand the potential of it. But the reality is that blockchain is a backend technology. People are not talking about how the SWIFT network transfers money. No one actually cares. What they care is the end result. So I think at the end of the day, it's all about just value proposition. And again, if the infrastructure is strong enough, we'll have a value proposition that we can educate people about. We can just say, okay, why would you use this? Not because it's blockchain, but just because you have in your phone an app where you can hold your money in multiple currencies, and your the amount that it costs you per month to have that is zero. I mean, it sounds evident, but in Latin America, just to have a bank account, you have to pay every month.
Yeah.
Compared to in Europe, where a bank account is free. And again, that as a value proposition needs to just be explained, and they need to change that mindset of, financial services can actually be accessible and they can be free.
And it's also about the merchant being able to accept cryptocurrency as a payment method as well. It's both ways,
correct.
Actually.
It goes both ways, but at the end, it's not. It doesn't even need to be something that they say, okay, we accept cryptocurrency. It's just more, there is this new way of storing value, which is a new technology, and you can pay with it. And I'm sure that the technology used to accept Apple Pay is different than what you use for Visa, but no one actually cares. Just the fact that you can pay with it. Yeah. So
to speak on that point you said, Juan David, I think the biggest ignorance we've had over the last decade in crypto that stunted adoption is we focus so much on trying to constantly explain the technological side of things. When, as you mentioned, people want to know utility. If you can give someone an application. Yana, who was supposed to be on the panel today and stuff, she's working on an application that's focused on basically bringing remittance services to regions in Latin America. And eventually, once you have, stable coins and other crypto liquidity coming in, again, they don't have to know it's crypto. Yeah. In this case, the ability to send it back and forth, kind of like an e-wallet. I mean, this is just extremely valuable. And, as you mentioned, merchants want to receive dollars. They want to receive things that have some sense of stability. And as Ernesto mentioned, something that's not depreciating to 1/6 of its original value just a couple of months later. So again, I think that's the ramification. It's the utility versus technology.
Yeah, okay. We're actually running a bit out of time. So just a last question as well, asking your take on a fact, which is, of course, that blockchain enthusiasts are really boasting about blockchain being the technology that is going to enable financial freedom for the unbanked and the underbanked. But now you also have some other people as well who are stating that, yes, of course, it's helping, but it's like the majority of people being helped are not really the unbanked or the underbanked, but mostly the average people who just now have access to a class of assets which are different and that used to be just targeting beforehand, let's say, the most wealthy people around. So, I mean, the final goal then of that blockchain technology for financial inclusion was not really met. What is your take on that?
I mean, I can give an answer.
Yeah, please go ahead.
If you want.
Yeah, so I think that definitely we are still not banking the unbanked. Like we've spoken today, the technology is still very complicated, and it is so difficult right now that, for example, DeFi is being used by the most technologically savvy people within crypto. Mm-hmm. So, but it's good because it's still a very nice experiment, and these people are finding out stuff. Whenever they figure out what solutions work, some of them will be applied and will be simplified and will be translated into a language that anybody can understand. just like, you buy some furniture and it tells you, put this pin here, insert this slot there, and that works. I believe we're doing the first steps to be able to give solutions to the people that are unbanked, even though right now we're still not doing it. So blockchain will be part of the solution, and it will be a great tool that needs to be deployed.
What, David, you had what is your take on that statement?
I'm just saying, look, financial services today, not even blockchain services, any financial service at the end of the day is gonna be used by the one that has the biggest use for it, the biggest value proposition, that you capture the value proposition. And indeed, in blockchain technologies is not different. So majority of the people that are taking advantage of this are the ones that the value proposition generates a lot of value. So if I am a company in Germany and I'm trying to set up an oil pipeline in Venezuela, it's actually very convenient for me to take 500 Bitcoin and travel to Venezuela and sell this 500 Bitcoin there to actually pay for this pipeline. It sounds ridiculous, but I actually know someone that exactly did that, like a German company that is basically dealing with Bitcoin in Venezuela to set up a massive project. And then is he the poor person that, of course not. This is a large German company, but that's where they find the value, because for them the value of not having to go through the traditional system is actually higher than for someone that has a lower amount of money. But it's the same that happens in other industries. I expect it to be the case, at least for, I would say, the next 15 years, where as the technology develops, majority of the people that find value in it would just be the 1% in the world will be the ones that find the most value in it, and then it will start to go down. But even in a country like in Colombia, most probably the biggest value proposition of cryptos in Venezuela or in Mexico is the capacity to store your wealth in an asset that would not depreciate if you want to. Like you could have USDC or USDT or whatever, just a stable dollar if you want. That's already enough value proposition. But that's a value proposition that might be interesting for someone that has $50,000.
Okay.
But the percentage of the population with $50,000 in Colombia is actually very small still.
Yeah. Okay, thank you very much, guys. I have to stop this. It's a shame because it's a very interesting panel. But thank you so much. All your insight was super valuable. So thank you very much for participating. Thank you.
It was a pleasure, everyone.
Thank you.
Talk soon. Bye.
Bye.
Bye, guys. Bye.
Well, a huge thank you there to Beatrice for moderating the panel. It was great to hear insights from Nicholas and for the Dash team and also the team at Keyrock. So a big thank you there. Now it's time for our final panel discussion of the day. We'll be taking a look at Bitcoin and supporting financial inclusion. And our stellar guest lineup is Alex Mashinsky, a serial entrepreneur and founder of 7 startups, raising more than $1 billion and exiting over $3 billion, and Tim Draper, an American venture capital investor and founder of Draper University, Draper Network and Draper Associates. This panel will be moderated by Steve Good, founder and best-selling author of Be Left Behind. Take a look and enjoy.
Crypto as collateral. Is Bitcoin to the rescue?
Hi everyone, this is Steve Good. I'll be moderating today with Tim Draper and Alex Mashinsky. Alex is known as a serial entrepreneur. He's also the CEO of Celsius. It's his 8th startup, and he's also famous for the voice over IP that we all use today, including here on Skype. And Tim Draper, 30-year investor, founder of Draper Associates, DFJ, and Draper University, and creator of Virtual Marketing. So very good to have both of you here. Thank you both for joining.
Viral marketing.
Viral marketing, what did I say? Virtual. Well, we're here today, guys, to talk about Latin America. So, we could talk about how to make Latin American virtual or viral too. So I've got a couple of questions to put out there for you guys. I think where we can start is, if we think about the Latin American market, what do you both see are some of the current barriers to entry with cryptocurrency in the region, and also the opportunities in terms of for existing businesses and new businesses? So I'll start with you, Tim.
Well, I'll hit the opportunities. If it's interesting because in Latin America, more than almost anywhere else in the world, they have less trust in their government currencies, and crypto, Bitcoin, and other cryptocurrencies are are a great alternative for them because instead of being tied to political forces that just print money, much the way the U.S. just printed $13 trillion, they now can have a currency that they trust, that I mean, there are only 21 million Bitcoin out there. So you can have a currency that is decentralized and open and transparent and not tied to some political force. And you can have faith in that currency. I know that down in Argentina, they look at the peso as a hot potato. It's like, here, take it. No, I don't want to hold the peso for more than a minute because they know that it drops by 30, 40, 50% a year. And the same thing's true in Venezuela with the Bolivar. So I think in many other countries in Latin America also have problems with their currency. If they adopt, even in parallel, adopt Bitcoin as a national currency, they could actually, those countries could thrive because they would attract all the brain power and all the entrepreneurs from all other countries around the world, and they could give business great confidence so that people start thinking longer term and they start building things for a long-term future.
That's fantastic. Alex, what about you? So you're looking at, you're running a business in cryptocurrency as well. Have you got a perspective on this in terms of how businesses can transition from traditional into cryptocurrency, Bitcoin, Celsius Network, or other ways to expand their business?
Sure. Just before I jump into it, you neglected to say that Tim has been basically the inspiration and a mentor to two generations of entrepreneurs. So if there's anyone who's giving his heart and investing in helping people, give a free advice, whatever you need, Tim is always there to help you out. So so I helped bring Voight to South America. I deployed with Embertel in Brazil and with, in every country, in Mexico, everywhere else. And the people that want this innovation, right? I mean, they want cryptocurrencies. They want the latest technology. And this is a great opportunity to leapfrog an older and kind of stagnant financial system that they're stuck with, that their governments have given them, into something that takes them straight into the 21st century, right? So I think a lot of these like devaluations that we've seen, like Tim was talking about Argentina and so on, they defaulted on their debt several times. They've devalued their currency several times. You woke up in the morning and suddenly the money you thought you had was either locked, like they did in Brazil, they locked it up for 10 years, and the inflation just ate it away. Or in Argentina, it was devalued by 50% overnight, right? So what people there want is basically to invest in something that is a great store of value, not a horrible store of value, and can also earn interest like what Celsius is doing. So the tools are available. I think all of us can do a better job, for example, building content and educational stuff in Portuguese or in Spanish and so on, because most of us are, kind of English is the main language, and we're not really catering to South America. So I think we can all do a better job at that. But the opportunity is really to empower these people to be able to get to financial independence, get to retirement, and live honorable life versus worrying about their financial existence, right? I mean, that's what they're facing every day. And the blockchain cryptocurrencies can really solve that problem.
So
I also noticed that Alex is wearing a HODL shirt, but now it's hold on for dear life. And it's just the opposite of what people do when they have an Argentinian peso. It's like, get rid of it for dear life, move it, get it out of here. We want to hold something else. And for a while they were holding dollars, and they were feeling pretty comfortable about that. But we just printed $13 trillion. And that devalues the dollar by about 25%. And that will create all sorts of, I mean, the U.S. could end up with the same kind of inflationary problems that all these other countries have. So why not start doing your business in Bitcoin or other cryptocurrencies because you will have a currency that you can trust, you can hold, and you can trust. And it's interesting, and people say, well, how can you predict that Bitcoin's going to be at $250,000 in 2022 or 2023? And and it's easy for me because we've done the speculative thing where everybody kind of goes, oh wow, that could be really interesting. And now we're doing the DeFi thing, which Alex is the innovator of. He's the first of the DeFi. I mean, anytime you hear DeFi, think Celsius, because that's what they were first. And
we just called it money over IP, MOIP, and everybody else went with DeFi. It's like,
VoIP.
So here we go again.
All sorts of OIPs, and so he's taking us through that, and then I learned that first that women are about 80% of the world's shoppers. They control 80% of the retail. They also are only 1 out of every 15 Bitcoin wallets are owned by a woman. And so what's going to happen is we'll go through this DeFi period, and then we're going to go through this retailing period where people are actually spending it. And they're going to do it because the women will save 2.5% to 4% every time they swipe their credit card or debit card and use Bitcoin instead of using a fiat currency. And that will open up the gates to where the world is really operating in Bitcoin. I'm looking forward to the day where I can raise money in Bitcoin, raise a fund in Bitcoin, invest it all in Bitcoin, have the entrepreneurs pay their employees and suppliers in Bitcoin, and then have it all on smart contracts so that rather than having to pay a bunch of accountants, I'll have my accounting all done on the blockchain. And rather than paying a lot of lawyers, I'll have my the payments all made on a smart contract. I think that's in our mid future, like 4 or 5 years out. And our world is going to be completely transformed. And that's why I believe that, and as a currency spreads, its value increases. So that's kind of the way it works. And the current value of all the Bitcoin in the world is something like $300 billion. And there are $100 trillion of currency out there. So we have, what is that, a 300 times possibility of increasing?
Plenty of room to increase it. But it's not just the Fed that's printing money. I mean, every central bank in the world is almost like in competition with the Fed to see who can print more faster. So all the the tide is kind of going down on everybody at the same time. And the beauty of Bitcoin is that it has its own limited supply, and it's not tied to that tide, right? It stays where it is. Like Tim always says, 1 Bitcoin is still 1 Bitcoin. It's just that the number of dollars that you need to buy it keeps increasing because the value of the dollar is coming down. But I wanted to make a point about South America, just that in countries like, again, Brazil, Chile, Argentina, what we're seeing is a lot of international commerce settled in Bitcoin because there is currency control. All these countries that are struggling, they don't have enough dollars because their exports that are dollar denominated are down 50% or whatever. So they don't have enough dollars. So they put restrictions. But if you want to import something from China or Japan or anywhere else, you probably are paying in Bitcoin, and you're paying a 5 or 10% premium. And that is still cheaper than going through your bank and doing all the currency control stuff and paying penalties because you're effectively exporting dollars and importing some products. So the international commerce is already taking advantage of this as a base currency. And we're going to see that increasing. And like Tim said, we need to see retail come into the fold. And we, as crypto community, have failed to bring women. 90% men. Like we're all sitting there showing our socks and ties and shirts, and then the women don't want to join us, and we're like, why? So But check our website, Celsius.network. We redesigned it. It's designed to attract women, to invite women, make it easy for them to save, earn yield, and hodl. So let's see if we break that break that dam, and bring women into crypto.
Let me transition for a second here, because we've been talking about currency, and so I think it's kind of a nice segue for us. So with the general volatility that we see in Latin American currencies, how do you both see this affecting either the Bitcoin adoption or stablecoin adoption? And also, how do you guys see this impacting the local countries if we see adoption shifting from their currency to Bitcoin or stablecoin?
Well, I think every government needs to figure out how to tax in Bitcoin. And once they have, then the river will turn the other way. Right now, the river is against Bitcoin because they're saying, wait, we need to regulate this. We need to protect it against it because we tax in Argentinian pesos or in Bolivar or in whatever. Once they realize that they can go ahead and tax in Bitcoin and it's easier and it can go right on a smart contract or and it can be taxed on the blockchain, then governments are going to go, whoa, this is much better. But in the meantime, the businesses are saying we have to operate in Bitcoin. We can't operate in this currency. We don't feel comfortable operating in some currency that is going to decline in value over this period of time. And it's interesting. Trust is an interesting thing. Trust is the most valuable thing. If you go to a country where everybody trusts each other, you show me a country like that, I'll show you a rich country. If you show me a country where nobody trusts anybody, I'll show you a very poor country. And currencies are currently going through something like that. If there's a currency that people trust, that will be a rich country. And if there's a currency people don't trust, that will be a poor country. And so if I'm a country where they don't trust my currency, where people are trying to get rid of it and do business in other currencies, even if I owe the IMF a bunch of money and I have to kind of pay it in weird ways or whatever, and I have to print money to do it, I think I want my people to be thinking of becoming builders. I want them to build things for the long term. And the only way they'll do that is if they have something they trust. And that's where they can build on Bitcoin. They can trust. It's a currency that people can trust. They know that if they get dumped out of office for the other party, still everybody will still be operating on Bitcoin, and they won't have somebody just printing a bunch of money and devaluing the currency, and so that where business people lose trust. You want business people who will focus on the long haul. You want them to feel like I'm building something of great value for me, for my kids, for my grandkids, for my community, for my country, for my world. We want that. We want that feeling. And you don't get that feeling if they're manipulating your currency and every 10 years you completely lose it and you have to start all over. Why would you build anything of value? You got to build things of value, and that value comes from trust. That value comes from long-term thinking, where people plant the tree from the beginning and they grow it knowing that they're going to own that tree when it's a big, great tree. Instead of just stealing trees from each other, stealing beans from each other and ending up poorer and more miserable than ever.
They're stealing the sprouts. It's not even trees. I mean, it's like nothing, it's like, so, I mean, look, I agree with everything Tim said. Just to add to that, I think if you think of fiat currencies as dominoes, right? And you start with the small dominoes, which are the weakest fiat currencies, the Turkish lira, the Argentinian peso, the Venezuela currency, right? All those dominoes are falling down. And as they fall down, they cause bigger dominoes to fall down, which are the stronger currencies. And the last three dominoes are the Japanese yen, the euro, and the dollar. And the dollar is really supposed to be the last one that's holding the whole dam from falling down. But the problem is that if you have 100 currencies kind of leaning against the dollar, even the mighty dollar cannot hold all that power back. And especially not when we're printing tens of trillions of dollars, borrowing from the future, reaching out to the future, printing our kids and our grandkids' money, their taxes effectively. We're bringing it to them, we're spending it today because of Corona, because of the financial stuff that's going on, where we basically don't care about deficits and things like that. So all of that is good for Bitcoin. It's horrible for us as Americans or for us as Argentinian citizens, but it's great for Bitcoin because Bitcoin is effectively its own universe. It has nothing to do with this entire ecosystem. And like Celsius, for example, has now close to 200,000 customers from over 170 countries. Like Tim said, they entrusted us with $1.3 billion worth of cryptocurrencies, right? Mostly Bitcoin, Ethereum, but also a lot of other currencies. The third largest currency we have is actually Cell token, our own token. So,
fantastic.
So when you see people from all over the world basically saying, not that I just don't trust my country, but I'd rather trust somebody in New York that I've seen on YouTube. I'll send him my money. That is, I feel more trust with them than I do with my local government. And that just, it's not that Bitcoin or Celsius is so good. It's that the governments and the banks and the financial institutions are so bad. They're definitely not here to act in your best interest.
What role in 30 seconds do you see will be the most critical role that DeFi plays in Latin America? So we'll start with you, Tim.
Why don't you start with Alex? He's the leader of DeFi. He's
so
the guy.
So Celsius, like Tim said, Tim gave me the credit for it. Celsius was the first project in the world to basically tell you, here is a token, and we will give you this as rewards if you just deposit any digital currency with us, right? And DeFi is just all kind of variation of that. Now you can get comp token and you can get uni token, but the first token that actually did that was a cell token. And we created a new invention, which is that you can earn on one asset with another asset, right? So instead of earning dollars on dollars, you can earn with something that is completely detached again from your universe. So you can still deposit stable coins. For example, you can deposit something like a US dollar or a peso, but you're earning in something that appreciates based on the community size. So,
cool.
So DeFi has this amazing opportunity, again, to transform, to allow people to leave their existing fiat world and go into what I call the MOIP world, or money over IP.
Fantastic, thank you.
And I think I'll finish with a quick story. I met with President Macri of Argentina about 3 years ago, and I told him about Bitcoin, and I got him kind of excited. And then the next time I saw him was 2 years later, about a year ago, and he was still president. And I said, during that time between, last time I told you about Bitcoin and now, Bitcoin's dropped from 10,000 down to 4,000. And he said, uh-huh. And I said, yeah, and the Argentinian peso during that time has dropped from 75 cents down to 25 cents. And he's kind of a little embarrassed. And I said, so I'll tell you what, we'll make a bet that if the Argentinian peso does better than Bitcoin over the next year, I'll double my investment in Argentina. And he goes, okay. And then I said, and if Bitcoin does better, you make Bitcoin a national currency. So Bitcoin's going from 4,000 to what, about 12,000 now during that time. And the Argentinian peso has gone from 25 cents down to less than 1 cent during that time.
Wow.
And he did not get reelected. And I think if he had made Bitcoin a national currency, he might have been reelected. He would have built confidence into his future, into the future of Argentina, and he would have made a big impact on his people. But now it's on to some other government, and hopefully they'll take up the bet. We bet on it, but he didn't completely agree. We did end up shaking hands, but it wasn't about the bet.
Well, listen, Tim, Alex, it's been an absolute pleasure having you both here today on our panel discussion. Thank you both for attending, and we're moving on to the next session.
Well, a nice final note from Tim Draper there on his interaction with the President of Argentina. A huge thank you to Steve Good for moderating the panel, and Alex Mashinsky also for sharing his insights. Well, that brings us to the end of AIBC Digital Americas. Thank you so much to all of our delegates that tuned in throughout the day. We had a lot of interaction on the chat, a lot of networking, and a lot of business communications and interactions were exchanged. So a huge thank you to everyone that joined us throughout the day. We also had a lot of you active on our polls, taking part and sharing your insights, and we really value all of your time and your attention. We look forward to seeing you in February 2021 in Malta for our next physical conference. In the meantime, to keep up to date with all AIBC updates, head over to AIBC on Twitter and Facebook and LinkedIn. Thank you all so much for today. Stay tuned for next time.